Theresa May vows to ramp up the fight against extremism in the wake of the London terror attack. She's chairing a meeting of her crisis committee right now. With 3 days to go, how does the atrocity play into the UK election race? Line in the sand, a Saudi-led alliance cuts off diplomatic and economic ties to Qatar over its relationship with Iran. Oil jumps whilst the nation's stock market slumps. And as President Trump prepares to launch his big construction initiative today, Jamie Dimon tells us that U.S. infrastructure is embarrassing. Good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacroix in London. Now, of course, this is the Monday after the weekend of terror here in London. In a moment, we'll be live to the scene of the attack and to Westminster with the latest on the investigation and, of course, the knock-on effects this could have on the UK election. Remember, it's on Thursday, June the 8th, that the UK goes to vote. So we'll be joined by Anna and Nera in just a second. But first, let's get straight to the Bloomberg First Word News. Here's David Ingles. David.
Fran, thank you. Let me get started with oil here. Higher this morning after 4 Arab countries led by Saudi Arabia cut diplomatic ties with Qatar and moved to close off access to the nation. Now, this escalates a crisis that actually started over Qatar's relationship with Iran and its support for the Muslim Brotherhood. U.S. Secretary of State Rex Tillerson has urged members of the Gulf Cooperation Council to remain unified.
We certainly would encourage the parties to sit down together and address these differences. If there's any role that we can play in terms of helping them address those, we think it is important that the GCC remain unified.
Russia's president says he's unaware of any proposal from President Trump's son-in-law, Jared Kushner, to set up a secret line of comms between the incoming administration and his government. Speaking exclusively to NBC News, Vladimir Putin also said it's nonsense to say his country has collected compromising material about Trump. The interview was recorded on Friday and broadcast last night. Now, JP Morgan CEO says China has made huge progress in market reform since he would like to increase his firm's businesses in the nation. Speaking exclusively to Bloomberg, Jamie Dimon said that the bank is hoping to get a corporate bond license in the country and would consider another joint venture in Asia's largest economy.
They've made huge progress in reforms, financial reforms, market reforms, but they're going to have it's going to have tough times, and we should all understand that. That's true for every single country that's gone from an emerging market to a developing country to a developed country.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm David Ingles. This is Bloomberg. Fran?
David, thank you so much. Now, Theresa May is right now chairing a meeting of the UK government's emergency committee, that's COBRA. It comes after Saturday night's terror attack in central London, which left 7 people dead. Sterling is weaker this morning, with the atrocity raising the stakes in the UK election, which is just days away. We'll have, of course, the latest on the political ramifications with Anna Edwards in Westminster in just a moment. But first, let's get to Nera Chajic, who joins us now from London Bridge, the scene of the attack. So, Nera, it seems that we're still in lockdown. Do we have any more on the identity of the attackers?
Well, as far as we understand, Francine, the police, the Met Police, are aware of the identity of the attackers. They think they know their identity, but they have not yet released the information about those 3 attackers that, of course, were shot dead by police just minutes after they began their attack, which involved ramming into pedestrians on London Bridge in a van before embarking on a stabbing spree through Borough Market. That area of London Bridge, Borough Market, and a lot of London Bridge is still cordoned off behind me. Police say the cordons are likely to remain up for most of today, but the station is working fairly normally with trains and undergrounds going in and out, and a lot of pedestrians on the street, commuters walking across London Bridge as I speak. Now, in terms of the investigation, we understand that 12 arrests were made. One of those arrested, though, was released without charge, and 4 properties were searched. But this morning, police raided a further 2 properties and have detained a number of other people. That's what we know so far. Of course, the investigation still ongoing, though we know that Islamic State has claimed responsibility for the attack. Francine.
Nera, thank you so much. And of course, we'll have plenty more from Nera throughout the day. Now let's get to Anna Edwards, who's at Westminster. Anna, how is all of this playing into the election race?
Well, good morning to you, Francine. Immediately after these dreadful events on Saturday night, we were supposed to have a pause in campaigning, but the campaigning pause did not last long. We heard from Theresa May, the Prime Minister, yesterday morning. She talked about this line, enough is enough, and said that there needs to be an end to the toleration of extremism in Britain. Still quite unclear as to what exactly she means by that, but some thoughts on policy from some of our guests this morning. Difficult conversations, she said, we need to have, often embarrassing conversations in this regard. Well, then Jeremy Corbyn, the leader of the opposition, answered last night saying, yes, we need to have those difficult conversations. We need to start by talking about Saudi Arabia and their role, in his view, funding and fueling extremist ideologies. How does all of this play into the election race? That's on Thursday, of course. The voting is on Thursday. It's interesting to ask what people are going to be voting about. Security is certainly a bigger issue now than it was just a few weeks ago. Remember when this election was called, this was going to all be about Brexit, we thought. Now things have changed. Some of the polling has tightened, of course, but if you look at measures around defence and security, then the Conservatives do enjoy a more substantial lead in that type of polling than they do in the more general polls. So that's something to bear in mind. Does this play then into the Conservatives' hands? Well, I spoke to Charles Litchfield over at Eurasia earlier on. He said yes, but of course makes the point, well, it should do. But Theresa May, when she was Home Secretary, she did the job for 6 years. So some people might start to ask, well, should she not have been doing more to tackle this? The Conservatives then have been trying to criticise Corbyn, Jeremy Corbyn, the leader of the Labour Party, around his record on terrorism. They say he's soft on terror. They say he makes excuses for terrorism, something that he, of course, vehemently denies. They point to his relationships in the past with the IRA, his comments about Hamas, Hezbollah, his reluctance even to sing the national anthem. They try and tie all of this together in the hope that it paints a picture that the electorate won't find appealing. On the other hand, Corbyn points to Theresa May's record at the Home Office and the austerity cuts that we saw to policing budgets. Fran?
Anna, thank you so much. Anna Edwards there in Westminster, and of course Nara Chage at London Bridge. We'll have plenty more from both of them throughout the day. Now, the UK election, terrorism and political risk are all set to be themes at Goldman Sachs' Global Macroeconomic Conference in London today. And Peter Oppenheimer, Goldman's chief global equity strategist, now joins us from there. Now, Peter, great to have you on the program. Now, away from the human tragedy, which of course, good morning, which of course is at the forefront of everyone's minds, how should the markets view attacks?
Well, sadly, these terrible events have become all too frequent, and in some sense it's difficult for the markets to really make sense of them in terms of their broader impact on macroeconomic factors. Obviously, at the moment, volatility is very low despite events such as those that we've seen. And in many senses, I think this really reflects the extent to which the macroeconomic backdrop really is fairly stable, and people see very little to trigger a very big move one way or another in terms of interest rates or growth and growth expectations.
Peter, I know you don't have a crystal ball, and it's extremely difficult to know what polls to trust or what models to look at, given the uncertainty with polls in the past. But could this change the election on Thursday in the UK?
Well, as you say, it's very difficult to really know how this or other factors recently will affect the elections. The polls are there for people to see. They have been narrowing, but you know, there are sort of broader factors that have impact on the markets, and the markets have been relatively stable in the lead up to this election, partly because the markets, and the equity market in particular, is affected by broader global macro factors than those domestically involved in the UK itself.
So is that more central banks, Peter, and what does it mean in terms of your positioning ahead of the Thursday vote? Do you hedge?
Well, central banks, as you say, are obviously very critical here, and the relatively benign backdrop in terms of global interest rates, and also the strong and more global balanced economic picture that we've been enjoying over the last recent months, again explains relatively low volatility, but the reasonably robust nature of global equity markets. And bear in mind, of course, the UK equity market, the FTSE in particular, is, if anything, probably the most global of all equity indices. 80% or more of its revenues are being sourced from outside of its domestic market, and it's very much affected by, and a barometer of, indeed, the pace and breadth of that global growth backdrop. And that really is, I think, what's being reflected in still a pretty robust picture for the UK equity market and equity markets more broadly.
Peter, overall, in the equity markets more broadly, do you see a pickup in volatility as we get into the summer, or is it in check like it's been in the last couple of months?
Well, I think that, at the end of the day, volatility is a function of people's perceived risks about, if you like, known unknowns, the sorts of things that people can model knowing to have an impact on the way that equity markets or risky assets in general will behave. We're in a bull market for equities. That's partly because there's very little value in alternative assets, particularly so-called risk-free assets, but indeed also because global growth is strong and there's no urgency for interest rates to rise to a level which is likely to trigger a sharp downturn. Bull markets don't tend to just die of old age, but really need some catalyst to bring them to an end, even if they are expensive. And we do think that equity markets, like all asset markets, are pretty expensive right now. That catalyst would really need to come from some increased trigger to make recession look much more likely. And at this current stage, there's not an obvious catalyst for that to happen in the very near term. Having said that, of course, there will be events that will pick up volatility. What we would note is that you have a combination right now of very low realized and implied volatility and pretty high valuations, particularly in the US equity market. And that does mean that when an event happens or the increase in perceived risk of recession starts to come through, you're likely to see a bigger drawdown because of that combination.
All right, Peter, thank you so much. Peter Oppenheimer there saying that there's not an obvious catalyst, but we'll try and get from him what a correction could look like and triggered by what. He is Chief Global Equity Strategist at Goldman Sachs, and he stays with us. We'll also be building up to the UK election all week on TV Go, London DAB Digital Radio, and right here on Bloomberg Television. Then tune in for a 1-hour special on Thursday. That's at 10 p.m. UK time, where, of course, you'll get instant analysis of the markets as exit polls are published. Now let's get straight to the Bloomberg Business Flash. Here's David Inglis. David.
Fran, thank you. Banco Popular is reviewing how to bolster liquidity drained by deposit withdrawals and a deterioration of its credit. Now, according to people familiar with what's going on there, the Madrid-based bank, which is racing to sell assets and find a buyer, plans to meet tomorrow with the European Central Bank to discuss its options. Now, one person also said it is considering seeking oversight from central bank officials to guide the board's discussion should it not obtain the extra liquidity. Noble Group is asking lenders to extend a key credit facility until the end of this year as the embattled commodity trader seeks breathing room to negotiate its future. According to a person with knowledge of what's going on there, the company's core banks have hired law firm Clifford Chance to advise them amid crisis talks over a $2 billion credit facility that actually expires this month. Now, SpaceX has taken another step towards affordable spaceflight, sending a recycled rocket to the International Space Station. And the Dragon capsule was lifted into orbit by a Falcon 9 rocket from the Kennedy Space Center in Florida. It had previously supplied the laboratory back in 2014. CEO Elon Musk tweeted, "It's starting to feel normal to reuse rocket." Good, because that's how it is for cars and planes. And that's your Bloomberg Business Flash. Fran.
Thank you so much, David. Now, JP Morgan CEO Jamie Dimon says the state of U.S. infrastructure is embarrassing. His comments, which came during an exclusive interview with Bloomberg, come as President Trump prepares to formally launch his big infrastructure initiative this week.
We haven't built a major airport in 20 years. I'm told it takes 10 years to get the average permits to build one bridge. We haven't built a bridge in New York City. I mean, we're building one now at Tappan Zee. It's the first one in like 50 years. I just came from Hong Kong. I mean, it's embarrassing. America, the can-do nation, should get back to building and constructing, and it's permitting, it's rules, it's requirements. We just got to get back to a can-do attitude about building infrastructure that fits our country, and we're getting behind, and we shouldn't.
Well, Diamond also said the U.S. is going through a slow, weak recovery, but with the right moves, he thinks growth can be increased. Well, still with us is Peter Oppenheimer. He's Chief Global Equity Strategist at Goldman Sachs. Peter, thank you so much for sticking around. I want to get back to the U.S. in a second, but actually on the catalyst, you were saying that you don't see a huge correction in this kind of bull market because there's not an obvious catalyst. But what could mean a small correction? When you look at the biggest risks out there, is it China? Is it something to do with geopolitics, or is it actually the U.S. and maybe some of the Trump administration promises that he may not be able to push through?
Well, I think on the latter point, on U.S. policies and the aspirations of the administration, the market's hope for those has faded quite a bit already. If we look at a basket of companies with highest marginal tax rates, for example, many of which surged after the election of the Trump administration, you've seen a fading of the performance of these companies. So I don't think there's huge expectations really there for big tax reforms, at least for this year now, priced into the market. Politics, as you say, always has the possibility of triggering a correction. We have high valuations, so they're vulnerable to that. We have events, as you discussed, of course, in Europe with the UK election this week, but also potentially an earlier than previously expected Italian election, and that could again bring back some nerves into the market about the prospects for more uncertain political and policy backdrops as a result of that. In terms of more meaningful setbacks, more meaningful drawdowns or a bear market, again, I don't think that would just come from nowhere. It's likely to come mainly from fears about a recession and a downturn in profitability. And while eventually that will happen, we need to see some triggers for that. Either rates rising more than expected. Our own view is that in the US that is likely to happen, with rates rising a little bit more than the markets are pricing now. But also we need to look at things that tend to precede recessions, like flat yield curves, rising unemployment and so on. And when we start to get to these points, I think we would get more sort of orange flags, if you like,
right,
that we're getting closer to a point where there's a more substantial downturn.
Peter, talk to me a little bit about, so you're bullish on equities overall. Do you prefer European equities to U.S. equities?
We preferred Europe all this year, and indeed non-US equities in general to the US. The US equity market has had a phenomenal period of outperformance, really since the financial crisis started, mainly because it's had better profit growth, but it's also been an area where there's been more confidence and less concerns about the political backdrop or about the banking market and systemic risks. But because the world is more robust globally, economically now, and because some of those previously perceived risks about banking sector robustness or about potential systemic political events are fading, we're starting to get more support for markets outside of the US. Europe looks pretty good. Its economic environment is more solid. Banks' capital is now at a more robust level, reducing some of the risks there. And we are seeing stronger profit growth in Europe than the US for the first time for several years, and more upward revisions in earnings. And indeed, the valuations are more attractive. So we would expect better returns in Europe than the US for this year.
All right, Peter, one very brief last question. We're hearing, of course, that the Saudi-led alliance is moving to try and isolate Qatar. How does that translate into your equity world?
Probably not that much. I mean, of course, it again, could spin out into further political developments, which we would need to monitor. But I think the important point is that the oil price is being driven marginally really by supply and production by shale, and therefore is not likely to have a significant effect on oil prices. We actually think that oil prices will edge up from here. Our commodity team looking for Brent to rise to around $57. But as long as it stays within a relatively stable range, I think that that's not likely to spill over significantly into equity markets in a way that's likely to derail the current relatively stable and robust trend.
Peter, thank you so much for your time. Peter Oppenheimer, there, Chief Global Equity Strategist at Goldman Sachs. Now, up next, line in the sand for Arab states, as we were just saying, are cutting ties with Qatar. We'll explain the diplomatic spat next. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, this is the latest that we had, of course, from this UK terror over the weekend on Saturday. We know that Theresa May, at the moment, we understand, is still chairing a Cobra meeting. And then we also know that police with significant increased force over London may already know the identity of the three attackers that stabbed more than 7 people. Around 48 people were in hospital, but they still haven't released the name and the identity of the 3 men who killed 7 people near London Bridge on Saturday evening. These attackers were then shot dead by 8 armed police officers who fired a total of 50 bullets. So we'll have plenty more on that. We have Nera Chayich at Westminster Bridge and Ada Edwards in Westminster. On to our other top story in Saudi Arabia. Bahrain, Egypt and the United Arab Emirates have cut diplomatic ties with Qatar, escalating a crisis that started over the country's relationship with Iran and its support of the Muslim Brotherhood. Well, the 4 nations say they will suspend air and sea travel to and from Qatar. Well, Bloomberg Markets Middle East anchor Youssef Gama Eldin joins us now from Dubai. Youssef, first of all, give us the latest on this diplomatic crisis. This didn't come out of the blue.
It didn't. It's been a few years in the making. I mean, the relationship's been not ideal between Qatar and its Gulf peers. They patched things up after the 2014 fallout where they recalled ambassadors. But it really started kicking off in the last couple of weeks with the visit of President Donald Trump to Saudi Arabia. And then after that, basically the accusation was from Saudi Arabia and some of its peers that Qatar wasn't towing the line when it comes to Iran. Now the blockade across air, land and sea, ultimately from some of these countries against Qatar. There's a lot at stake here. Look, there's no going around it. The sheer ferocity of this decision to move ahead with the blockade is unprecedented. This is a new crisis low for this part of the world. Let me show you in terms of trade what that means. ECTR Go, the key function on the Bloomberg. This is for Qatar then, and you can see the key trading partners there, the United Arab Emirates on number 6, Egypt and Saudi Arabia on the 12 and 13. You switch that to imports. United Arab Emirates goes up to number 3. Now, what's important to remember, a lot of food is imported by Qatar. Citizens will be affected. They're not allowed to stay long from this point onwards in Qatar or in the United Arab Emirates for that matter. Francine?
Yeah, Youssef, give me a quick look at, of course, the market. So Qatari stocks were down some 7%, but also a lot of the airlines, of course, are affected by this.
Yeah, so we've seen quite a big reaction on the Qatar Stock Exchange. Most of the stocks affected quite significantly. Also, in terms of some other asset classes, bond yields on some of the international Qatar bonds. Also, the 12-month Qatari Riyal forwards. Again, these are people who are going to be betting against a weakening currency going forward. And then the interbank rates as well. Finally, of course, Mitsubishi UFG Financial putting out a note saying potential risks of Qatar leaving OPEC could significantly impact oil prices. Also speculating on a full-fledged confrontation there, Francine.
Youssef, thank you so much. Youssef Gama Eldin. Now, up next, keeping calm and carrying on after Saturday's attacks, Londoners go back to work. We look at pound. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Theresa May is chairing a meeting of the UK government's emergency committee called Cobra. It comes after Saturday's night terror attack in central London, which left 7 people dead. Sterling is weaker this morning, with the atrocity raising the stakes in the UK election, which is just days away. Well, Nera Chayich is at London Bridge, the scene of the attack. Nera, I don't know if a game changer will be when we actually find out more about the identity of the terrorists, but what do we know so far in terms of police presence and the identity of the perpetrators?
Yeah, that is one key piece of information that we're still waiting for, Francine. The police say they believe they know the identity of the three attackers who, of course, were shot dead by police within minutes of beginning their attack here at London Bridge on Saturday night, an attack that killed 7 and wounded 48. The police say, though, that although they might know the identity of these attackers, they are not releasing the information yet. So that is something that we are still waiting for. As you say, around an hour ago, this emergency COBRA meeting began with Prime Minister Theresa May and other ministers, interdepartmental officials as well. But what we know so far in terms of the investigation, Francine, is that there have been 12 arrests made, although one of those people arrested was released without charge. Also, police raided 4 properties in East London, or the east of London, in Barking. Now, since then, the investigation has gathered momentum this morning, with police saying that they raided a further 2 properties and have detained a number of people. So it is an ongoing investigation. Here at London Bridge, security still very much ramped up. There are police vans and police officers around the area. The area is still cordoned off as well, and we understand it's probably going to remain cordoned off for a lot of today. That said, London Bridge Station itself is pretty much back to normality. Trains and undergrounds running, and a lot of commuters have been walking by today as I've been speaking. Of course, finally, the last thing we know is that Islamic State has claimed responsibility for this attack. But as I say, we are still waiting for information on the identity of those 3 attackers. Francine.
All right, thank you so much, Nara. We'll get on to risks and, of course, terrorism in just a second. But in the meantime, we are just getting some services PMI figures. They're below estimates, so important to actually mention them for our global viewers and also listeners on DAB digital radio. UK May services PMI fall to 53.8 instead of the estimated 55. Now, this is the biggest component, of course, of the UK economy. It has had a little bit of an impact on pound. But remember, pound was also weaker in the wake of these attacks. And you can see pound there are 128.67. We'll also get Stephen Saywell from BNP Paribas very shortly. Now, though, let's get more on this terrorist risk with Nick Allen from Control Risks, an independent global risk consultancy, and he joins us now from their offices. Great to speak to you, Nick. Give us a sense of how this can impact the political sphere. I don't know who's responsible, for allowing this to happen, or whether because these are lone wolves attacks, they're almost impossible to actually keep an eye on and prevent.
So there's a lot of talk at the moment, is this attack and the ones that have preceded it in Westminster and Manchester, are they going to impact the UK election? And I think whatever happens on Thursday, and when we wake up on Friday morning and we know the result, I think people will be very wise after the event in terms of the political impact of this attack. The fact is, I think the election will be decided on many other issues. Terrorism certainly is going to play much to the fore in the coming couple of days, and we've already seen some of that starting last night with the speech, obviously, from the Prime Minister and then from the Leader of the Opposition. So, yes, they will play, but I think it'll actually be other issues that are going to decide this. I think whoever comes into power and forms a new government, this issue of terrorism, and in particular how intelligence is collected, and in particular what that means for online platforms where videos are posted, where secure messages are shared, is going to be a big issue going forward. And I think we have actually a lot more to see on that coming up.
Nick, how difficult is it to prevent these types of attacks? I'm thinking of Manchester, London, but also others across Europe.
So it's extremely difficult, and I think what we've seen, if we take the 3 recently in the United Kingdom, from the one in Westminster, which was probably the most basic, to the one in Manchester, which was the most sophisticated, where the individual, Salman Abedi, had to prepare and execute a complicated plot involving a bomb, to this one on Saturday, where there were 3 people involved, maybe others, but the method was fairly basic in terms of using a van and knives. So it's incredibly difficult. We've heard the security services saying that they've intercepted some 18 complex plots, and I think that is the focus of the intelligence services, is trying to get to the complex plots that involve bombs and guns. It's very difficult. There are some 500 people we know under observation in the United Kingdom to stop people who want to get hold of a vehicle and a knife. And there are just so many of them that for the security services in the United Kingdom, but also elsewhere in France and Germany and Belgium, where we've seen other attacks, to do much to prevent these kind of very sort of homemade and spur-of-the-moment attacks.
Nick, when we had the Manchester attacks 2 weeks ago, there were concerns about intelligence sharing with the US. If we share less intelligence with our allies and our partners, does this put the UK more at risk?
I think you saw a very quick reaction here in the UK when those photographs in particular were leaked in the United States, and I think there's been probably a fairly quick response in the United States to stop that happening again. There's talk about Brexit and what happens after that, whether the United Kingdom will share intelligence, but let's be clear, I think all governments have an interest in sharing intelligence, and I think that will continue. The UK shares intelligence on terrorism with countries with whom it has an uneasy relationship. If you take Russia, for example, there's a lot of shared interest in here, and I think that will continue.
Nick, we saw 3 attacks on the UK soil in as many months. Is there any reason behind this? Is there an explanation on why the UK now seems to be targeted so heavily?
So it's always been expected that the UK would be subject to these kind of attacks, and as I mentioned already, a number of attacks have been foiled. Some estimates vary, but say 750 to 1,000 British citizens have gone to Syria to support so-called Islamic State. And we're now at the stage where some of them have come back. We're at the stage where there are links with Islamic State who are inspiring these attacks. The threat picture remains the same. I think we need to be aware that these kind of attacks, there will be more of them, whether it's in London or other cities or on the European continent. We are in the month of Ramadan, and Islamic State has been very clear in its propaganda in encouraging its followers to perpetrate attacks during this month, which started towards the end of May. And I think that is a factor. But it is, to repeat myself again, very difficult for intelligence services to keep on top of this threat the whole time.
Nick, thank you so much for all of your analysis. Nick Allen there from Control Risks. Now joining us now for the rest of the hour, Stephen Saywell. He's Global Head of FX Strategy at BNP Paribas. Stephen, again, it's not about being insensitive because, of course, we're really at a loss of human tragedy. But the impact on pound was also a little bit striking because I guess markets and investors worry that this may have an impact on the election because it's just 3 days away.
I think that's the way to look at it as far as markets are concerned. Remember, I'll try to be quite straightforward and simplistic on this. Remember, the pound surged when this election was announced, and the reason for that was it was assumed that the Conservative government would increase their majority somewhat based on polls. Now, from the perspective of a narrowing of polls, the logic then is that the pound suffers, and I think that's exactly what we've seen. As we've seen the Conservative lead narrow, the market is less focused on the pound. I think another point we should focus on here is positioning as well. I think a couple of weeks ago when the election was announced, remember the market was very, very short sterling. So a lot of this rally was actually short covering. We're back to a more neutral scenario now, and I think that raises the bar. I think it's going to be trickier for the pound to rally from here because I think it's a bigger ask for investors to go long sterling, given the current uncertainty over Brexit, rather than covering shorts on the potential for an increased majority from the Conservatives.
But was it a game changer when we had that YouGov model? So it wasn't a poll, but it was a model saying that actually Theresa May could fall short of any kind of majority. That would lead to hung parliament, which would mean that you could have a coalition between SNP, Labour and the rest. Again, if that's the scenario, hung parliament, what does it mean for pound?
Yes, no, you're right. That was a game changer. And our view at BNP Paribas is very much that the hung parliament is a very poor outcome, a very bad outcome for the UK. So to answer your question, what would happen, we would suggest those short sterling positions that we had discussed previously would certainly rebound. So we would suggest there could be quite a sharp decline in sterling, say against the dollar, back to at least 125, potentially even lower, if there is a hung parliament outcome.
Stephen, we had these inflation, or actually the inflation squeeze and the election jitters means that UK services have been taking a toll. We broke it about 9 minutes ago, saying that services activity cooled more than economists had expected in May. Is this a sign of things to come? Or again, can you explain it in a very short term kind of, it's a bit of inflation, but also the fact that ahead of the elections, people were cooling off services a little bit?
Well, there is a concern here. And remember, we had that weaker than anticipated GDP outcome in the UK in Q1. So the market is relatively weak. I would argue as far as the currency market is concerned, it's much more about politics and sentiment, because the big picture here is sterling is very, very weak. Relative to where it would be if we didn't have the uncertainty here over Brexit. We would suggest it would be, cable, for example, would be up around 137, potentially even 140. So there's already a lot of uncertainty priced in. So our view would be that the political uncertainty is more important than the economic fundamentals currently at driving the pound.
All right, Stephen, thank you so much. Stephen Saywell there from BNP Paribas stays with us. Up next, we speak exclusively to JP Morgan Chase CEO Jamie Dimon, his take on trade, Trump and the U.S. economy, and it's embarrassing, his words, not ours, his embarrassing infrastructure. That's coming up next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Well, let's get a quick check on your markets. Here is Mark Barton. Mark.
Francine, the stocks are down today after the first weekly gain in three. A number of European stock exchanges are closed today for the WIT holiday. WIT Monday, it's no Germany, Switzerland, Ireland to name. But a few investors digesting Friday's jobs report, the weekend terror attack here in London, and that Saudi-led alliance cutting ties with Qatar. This is sterling going back to just before Brexit. We are a little bit lower today. Earlier we fell about 0.25% after that weekend terror attack killed 7 people. We're down about 0.1% now, days before the election, of course, the snap election on Thursday. Since Theresa May called the election on April the 18th, sterling's up by 2.4%. In May, the level of sterling rose to roughly 130.36. That was an 8-month high. Since then, sterling has been buffeted by the polls, which signal a tightening race. If we get a hung parliament, that's going to add to uncertainty just 11 days before Brexit negotiations are due to begin. 1 week implied volatility. This goes back to 2012, Francine. Highest since January. So implied volatility, expectations for swings in pound dollar in the next week increase. We're nowhere near the levels, the record levels we were just before the Brexit referendum last year. I've also circled the 2015 election and the 2014 Scottish referendum. We're not near those levels as well, but certainly volatility is picking up. This has to be the chart of the day. This is Qatar's QE index going back to 2012, Francine. Today's decline, 8.3%, biggest decline since 2008. The governments of Saudi Arabia, Bahrain, UAE and Egypt cutting diplomatic ties with Qatar. It's an unprecedented move, as you know, Francine, designed to punish one of the region's financial superpowers for its ties with Iran and Islamist groups in the region. That's a massive decline for the QE index today.
Mark, thank you so much. Now, more now from our exclusive interview with Jamie Dimon. JP Morgan Chase's CEO told us that he had supported the U.S. staying in the Paris Climate Accord that President Trump abandoned last week. Well, we asked Jamie Dimon on what other areas he disagrees and agrees with Trump.
I was in favor of TPP, and, I hope it may come back in some form or fashion. But like I said, I'm very comforted by the fact that Wilbur Ross and Steve Mnuchin are negotiating, as we speak, additional trade agreements with China. And, I hear that they want to do something with NAFTA. I'd be very much in favor of that. We have a wonderful and peaceful neighbors in Canada and Mexico. And, to the extent that things were unfair, and I've heard, officials about there are things that are unfair in trade. We'll deal with them. Talk to the other countries and say, we think these 5 or 6 or 10 or 20 things are unfair, and let's be a little fairer. So, I'm for free and fair trade, and sometimes it isn't fair. That's completely true. And there may be some things that are not fair on the other side, too. But obviously, I haven't thought about that very much.
Should the United States take part in AIIB, though, or some of the other RCEP, some of the agreements that China is pushing for?
I would have, but, I haven't looked at it in a long time. And, if they're properly structured and properly governed, helping nations develop and regions develop is a good thing. So, if they're done badly, I wouldn't. But if they're done well, I would participate.
Yeah. How do you?
It's in America's interest and China's interest that we both do well. And it's not one against the other. That's a mistake when people look at it like it's a zero-sum game.
Yeah. How do you see the U.S. economy right now? And also, I know in the second quarter, some of the trading volumes, trading revenue is taking a bit of a dip. I know that's the markets as opposed to the economy. It's a two-part question, but maybe we'll talk about the economy first. As the Fed embarks on maybe what's
I'll do trading
for
trading is like the weather. It goes up and down, and you can guess and predict it, and I think it's kind of a waste of time. I don't spend much time doing that. To me, when we do trading, we serve clients around the world. It's prices, execution, discipline, and of course, if you say over 20 years, it's going to go up because the financial assets of the world are going to go up. What it's going to do next week or next month, I couldn't possibly tell you. And the U.S. economy has been chugging along just under 2% growth for 8 years. It's a very long recovery. It's a weak recovery. It's about half of the average recovery. And so I think, and there's no great weak spot in the American economy, so I think if we make wise policy decisions around, which will take a while, corporate tax, infrastructure, regulatory reform, and other things, I think we could grow the economy more. And I wrote about it in my chairman's letter. I feel quite strong about it. I don't think we're relegated to slow growth forever.
Yeah, how about China's pushing infrastructure? What needs to be done in the United States for infrastructure?
I made the point in my chairman's letter, we haven't built a major airport in 20 years. I'm told it takes 10 years to get the average permits to build one bridge. We haven't built a bridge in New York City. I mean, we're building one now at Tappan Zee. It's the first one in like 50 years. I just came from Hong Kong. I mean, it's embarrassing. America, the can-do nation, should get back to building and constructing, and it's permitting, it's rules, it's requirements. We just got to get back to a can-do attitude about building infrastructure that fits our country, and we're getting behind, and we shouldn't. And it damages growth.
Jamie Dimon there, the CEO of JP Morgan Chase. Now still with us, Stephen Saywell, Global Head of FX Strategy at BNP Paribas. Stephen, first of all, what's your take on the U.S. in general? We saw a little bit of weak wage growth and labor market not as strong as some people thought.
Sure. Look, we have a very clear view here. We think the dollar is too cheap. And the clear reason for this is that the market is not pricing in enough Fed tightening, not for June, but over, a 2-year period. Part of that is the very weak quarter we had in Q1. We think that rebounds strongly in Q2. We're calling for around 3%. And we think as data that is consistent with that comes through to the market, we think the dollar certainly will rebound. A bit of a curved ball on Friday with the non-farm payrolls. The markets did not take that well, and particularly the move lower in US yields, 10-year yields breaking substantially lower. That's not going to help that view I just spoke about. But the point we would say is you need to watch the data, you need to see whether Q2 does rebound, and if that's the case, we think the dollar rebounds. Final point I'd say on this, the market is short. So it's not sitting there long where there could be a risk to the positioning. It's the other way around. The market, we think, has the largest short position out there in about 4 years.
Yeah, it's very clear that actually the market is expecting one thing. The Fed is saying another thing. So you seem to be more aligned with what the Fed is saying than the market. So why is the market getting it wrong?
Well, I think the market would say they're getting it. The market would say they're getting it right.
Well, everyone always thinks they're getting it right.
The Fed is getting it wrong. I think it's really belief in what's going on and the data. So Friday was a classic example here. Even though we had a move lower in unemployment to 4.3%, that's straight into the Fed's camp there. Tight labor market, inflation is coming. At the same time, you actually saw jobs growth disappoint and a downward revision to the previous months as well. So the market is very skeptical here of the growth numbers coming through that would justify the rate hikes that the Fed wants to do.
When you're looking at the data, right, and this is kind of what you're saying, is that the market is pushing one way, but trust me, I'm right, because I'm going to see that data, and then we see a repricing of the markets, and we'll have our right bet. Is it wage growth and inflation?
I think this is a key point here. We've seen the ECI, one of the Fed's favoured measures of inflation, but I think it's generally the level of growth or the speed of growth. And I get back to that disappointment in Q1 because the market was hit with that downside surprise. They really want to see proof that growth is rebounding before I think they price in higher Fed tightening.
Stephen, we had this great chart actually on Friday, and this is basically the difference between U6 broad unemployment rate and the U3 main jobless rate. I mean, does this impact your forecast, or are you focusing more on GDP and inflation?
Well, I think this is exactly what the Fed's looking at. Remember, the Fed doesn't really care about inflation today. Like every central bank, they're looking 2 years down the line, and one of the best indicators they've got is unemployment rate because it signals the tightness in the labour market. So 4.3% unemployment is a real signal to the Fed that they need to get going as far as tightening is concerned.
Stephen, let's also move on the euro, because the ECB, of course, meets in Estonia on Thursday, and the Governing Council looks set to have its first formal discussion on what an exit from stimulus might look like. Well, almost all economists surveyed by Bloomberg say the ECB will acknowledge the risks to the euro area's recovery are balanced, but they are more split on whether the bank will remove its easing bias on interest rates. Is this a little bit of wishful thinking? So we thought that actually this was a huge meeting. And then when Mario Draghi spoke to Parliament last week, he seemed to be a little bit more tempered than that.
Yeah, I think there's a clear explanation here. We would view the market as being ahead of itself as far as being too hawkish on the ECB is concerned. And the reason is the following. While, as you said, the risks around growth are now more balanced, inflation is very different. And I think this is where the comments from Mario Draghi were focused last weekend when he spoke. We think they're still going to be relatively dovish because they're going to highlight that the risks for inflation are still there in the market, and we haven't seen sustained recovery in inflation. So from that perspective, it's this trade-off between growth and inflation. And if Mario Draghi still is concerned about the level of inflation, the fact we haven't seen a sustained rise, I think actually the euro could come under pressure following Thursday's meeting.
Yeah, but we also have Larry Fink saying actually growth in Europe is so much stronger than the U.S. Mm-hmm. And so I wonder what, at some point, you also have Angela Merkel, Jens Weidmann saying, well, we have a concern on Europe because of ECB policies. Mm-hmm. When will Mario Draghi actually start reining it in?
Well, it's interesting. We believe ECB policy has been much more focused on inflation for a long, long time. Remember, even when they went to a very dovish policy, when they went to QE, growth was actually okay. It was the fear of deflation and becoming like Japan that was really driving the ECB. So using that same logic, we think when we look at the exit strategy here, we think again it's going to be inflation that drives ECB monetary policy.
Stephen, this is the yield differential between Italian and German yield on the 10-year. So this is, I think the red circle is when Mario Draghi says, I'll do whatever it takes. Mm-hmm. And then you can see that gap in the yield going lower. And then here the problems with the banks. And again, now possible early elections in Italy. Mm-hmm. Is Italy your biggest risk in the euro economy?
Look, it probably is at the moment. But I would say it's more on a political side and on the periphery. Like, that's a fantastic chart. Look at that move from 2012 down to 2015. A huge improvement, fantastic narrowing of the spreads. What we're seeing here is a little bit of a pullback from that. But you mentioned the Italian election, or potential Italian election coming up. I think this is really the key here. We've gone beyond the French election now. The market is looking at Italy. However, the point I would make here, and I think it's a caveat, is it doesn't carry anything like the same risks of contagion.
That's important.
Exactly, that we saw with France. Yeah. So that French presidential election was very significant, very in focus for the market. I think this is a risk, but less of a potential catastrophe than I think some of the other political risks we've seen in Europe.
So what's your target on euro dollar? I mean, do you prefer euro dollar or actually euro pound?
Well, let's talk about euro dollar. It's probably the bigger one. We would be sellers here. We think it's overvalued. And remember, the two themes we've discussed in this chat are, one, the market's too hawkish as far as ECB policy is concerned, but also they're underpricing the Fed, and therefore the dollar is undervalued. So every measure we look at tells us the euro-dollar should be moving to the downside. So our near-term models are telling us we should be closer to 110 than we are at the moment. But as we go towards the end of the year, we wouldn't be surprised to see a move back towards 105, which is a reversal of the trend we've seen recently in markets.
And very quickly on pound?
We see potential for a moderate recovery if we do see a Conservative victory and an increase in the majority. But however, remember, it gets back to positioning. The market is pretty flat as far as the UK is concerned. I think it's going to be harder for the market to go long sterling than covering of shorts, which is what was the catalyst for the previous rebound.
Stephen, thank you so much. Great analysis there from Stephen Saywell, Global Head of FX Strategy at BNP Paribas. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. Of course, we'll have plenty more from the attacks. Again, we're 3 days away from this general election on Thursday. On Thursday, it's also ECB Day, and when we think Mr. Comey will testify. This is Bloomberg. Terror before Thursday's vote, a war of words between the UK Prime Minister and opposition leader Jeremy Corbyn escalates in the aftermath of a terror attack that claimed 7 lives. Break in relations, oil gains after Saudi Arabia and 3 other Arab nations cut diplomatic ties, economic ties with Qatar. And President Trump kicks off his so-called infrastructure week as JP Morgan CEO Jamie Dimon tells us the situation is embarrassing. Good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keynes in New York. Tom, we have quite a lot of market moves, not only on pound, but also on oil. And then, of course, we're trying to figure out the implication of these terrorist attacks without losing the human component, but on markets and, of course, on the general election, which happens in 3 days from now.
Yeah, I'll love all that coverage. I know Neera Chayich and Anna Edwards helping out on terror this morning. Looking forward to speaking to Jan Hatzius of Goldman Sachs here in a bit.
Yeah, we'll talk to him, of course, about the U.S. economy and those job figures from last Friday. But first, let's get straight to the Bloomberg First Word News. Here's Taylor Riggs. Taylor.
Francine, Tom, starting in the UK, the political truce after the London terror attacks lasted less than 5 hours. Prime Minister Theresa May and Labour Party leader Jeremy Corbyn ramped up the rhetoric days before Thursday's election. May argued that there's too much tolerance of extremism and called for a series of new measures. Corbyn went after May's record as Home Secretary, criticizing her for cutting police budgets. And less than 24 hours after the London attack, thousands jammed a cricket ground in Manchester for a benefit concert for victims of the terrorist attack there. It was headlined by American singer Ariana Grande. 2 weeks ago, Grande had just finished a concert in Manchester when a bomb exploded, killing 22 people. Saudi Arabia is leading a push to isolate Qatar over its relationship with Iran and its support for Islamist movements. The Saudis, Bahrain, the UAE, and Egypt have cut diplomatic ties with Qatar. They're also suspending air and sea travel links. Saudi Arabia has accused Qatar of trying to undermine efforts to isolate Iran. And Vladimir Putin is downplaying reports of Russian interference in U.S. politics. Putin tells NBC News he's unaware of a proposal from President Trump's son-in-law, Jared Kushner, to set up a back channel between the incoming administration and the Kremlin. Putin also says it's nonsense to say Russia has collected compromising material about Mr. Trump. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Francine, Tom?
Taylor, thanks so much. It is a different data check after the jobs report Friday. It moved the markets, equities up to highs. The VIX, you could see pulling it in, called an adjustment off of what we saw Friday. Oil, 47 handle, now 48.02. Next screen, Tania. If you would, euro with some strength over the last 48 trading hours. There's a Dow 21.2 really gets your attention with Brent still near 50. And the dollar index on a bid, but it has been a weaker dollar across the complex. Francine?
Yeah, Tom, this is what I'm looking at. So I think if you look at pound, it's front and center, and so is oil. So most of it, because of this Gulf crisis, oil climbed as this political spat between several energy-producing nations in the Middle East escalated, and then the pound paired earlier losses in the wake of the terror attack in London. But we also did have some services PMI. I know you were looking at Treasury yields remaining near the lowest in 7 months. And then very quickly onto peso, because there is quite a lot going on with elections in the state of Mexico. And you can see a Mexican peso, 18.3672.
Yeah, and Jan Hatzius suggesting his Fed call. We'll get to that here in a bit. Let me go to the Bloomberg Zero Hedge out Friday with a comparison of where we are now in economic growth to the 1930s. Modern economic data starts in 1947, which is over here. Here's the best decade, the boom of the 50s. And then we've got this 3.2% constancy here. Francine, this is stunning. This is where we are in the last 10 years, 1.3% average GDP. This shows the social shock of the moment. That's back to 1947. That's a jaw-dropping chart.
Yeah, it's a great chart. I really look forward to speaking to Jan Hatzius from Goldman Sachs about that. Now let's turn back to the London bridge attack. After a brief break in campaigning to respect the victims, a war of words ensued between Prime Minister Theresa May and opposition leader Jeremy Corbyn. Now speaking outside 10 Downing Street, May outlined a plan for tackling extremism.
While we have made significant progress in recent years, there is, to be frank, far too much tolerance of extremism in our country. So we need to become far more robust in identifying it and stamping it out across the public sector and across society. That will require some difficult and often embarrassing conversations.
Well, this morning, the Prime Minister has been chairing an emergency COBRA meeting here in London, and Bloomberg's Anna Edwards is outside the Houses of Parliament. But first, let's also get to Bloomberg's Nera Chayich, who joins us now from London Bridge. Nera, first of all, an update. Do we know the identity of the attackers, and how much do we know about the extra securities on the London streets?
We're still waiting, Francine, for that information about the attackers. The police say that they believe they know the identity of those three men that perpetrated this attack on Saturday night, but they haven't yet released the information. We do know, though, that the Metropolitan Police have made 12 arrests. One of those people, though, was released without charge. And this morning, they've already raided a further 2 properties, in addition to the 4 that were already being searched, and detained a number of other people. So the investigation is ongoing. And in terms of security, certainly stepped up all across London. Here at London Bridge, the area still cordoned off. There are police vans and police officers on the street. That said, the station itself, London Bridge Station, is pretty much back to normal.
Nera, thank you so much. Nera Chayich, of course, for us at Westminster at London Bridge throughout the day. Now, we're, of course, just 3 days away from this UK general election, so let's also get to Bloomberg's Anna Edwards, who's at Westminster on Abingdon Green. Anna, how much do we know about this latest terror attack actually changing the results on Thursday?
Thanks very much, Francine. Well, we'll have to wait for the latest polling data, I guess, to really get a sense of whether it's changed things. Remember, after Manchester, we saw the polls narrowing, but it's entirely unclear as to whether that was really anything to do with terror attacks or really rather to do with a policy U-turn around social care that we've seen from the current government. So putting the polls to one side, we'll wait to get more information there. It seems that both sides, Conservative and Labour, have been throwing mud at each other in the sense, trying to get security concerns to stick to the other party and to try and make their party look better. Traditional logic might suggest that a right-of-centre party does well when people are concerned about security, but the Labour Party has been suggesting, look, Theresa May has a record at the Home Office, maybe she should have done more, and also pointing out the extent to cuts in some parts of policing that we saw under the last administration.
Anna, I read John Schindler in The Observer yesterday, every word of it as carefully as I could, the terrorism expert, on the sheer size, the scope, the scale of this disaster. What does enough is enough mean to Londoners? When the Prime Minister says enough is enough, translate that.
Well, it's a tricky one, Tom, because she went on to set out 4 policy areas that she wanted to focus on and gave some detail, as you might expect from somebody who was at the Home Office for 6 years, on what she wants to see. But to some extent, the themes she picked up on were very much ones that have already been worked on, tackling Islamic extremism in the communities. This is something that is in the process of being done, has been done. Maybe it needs to be done more, but this was not a new turn. I spoke to Baroness Pauline Neville-Jones, who used to run counter-terrorism under David Cameron, and she was suggesting that a lot of that did seem to be things that were either already in the works or weren't necessarily radically new. We'll have to wait and see what that means. We also have to wait and see exactly what she means when she says some difficult and embarrassing conversations. Some people on Twitter, for example, pointing to free speech and open debates that are hosted on university campuses around the country. Maybe that's something that the government and security forces are going to increasingly focus in on. But to some extent, they have done that already as well.
Anna, thank you so much. A great update there. Anna Edwards in Westminster. Now, joining us as our guest host is Davide Serra. He's Algebris Investments Chief Executive Officer and Founder. Davide, thank you so much for coming in today. When you look at pound, it's having a little bit of an impact. Now, this is related to services PMI. It's related to the terror attacks. I mean, markets seem to take attacks like this in their stride.
Well, markets look at the economic implication. And then if you think about it, ultimately, London remains one of the safest capital of the world in terms of crime, homicides. And a man in a van with 3 psychopaths ain't going to make a difference on a city of 50 million people. So I think markets are being rational here. The key debate is, though politically, for the election coming up, that's the key debate. Does it change the election? I'm not sure. I mean, you're a Londoner. The economy has been part of this election cycle and talk. Brexit has been part of it. Security has also been part of it. Does this latest terror attack actually have any way of changing the election result? I don't think it will have a big impact. Clearly, though, the robotic message, strong and stable, after you've been Home Office Secretary for 6 years, you still haven't introduced compulsory ID cards, which you do have on the continent in Europe. In a way, it's kind of ridiculous. And the key debate, I think, here in particular is, hey, all the terrorist attacks have been carried by UK citizens, holding UK passports. They've been known to us. You've been Home Office Secretary for 6 years. You've done cat in the police forces. And as a result, why is Brexit the key issue when all our problems are homegrown with UK nationals, born here, studied here, they have their own passport. And if you don't know them, what have you been doing for the last 6 years? That's a key question, I think.
Yeah, it's certainly
we don't
a question
have the international
that will come
Al-Qaeda
up.
terrorists coming out of Yemen,
Which is kind of what we've seen, of course, Tom, the two sides arguing. Theresa May saying, well, Jeremy Corbyn has supporting groups such as Hezbollah, and of course him saying, well, you've been in charge for 6 years of Homeland Security. Why did you not do more about it? Tom, very quickly, we just have the latest poll. Now, again, I would take everything with a pinch of salt. It's models, it's polls. It's a little bit confusing, but the latest Guardian ICM poll have the Conservatives winning with an 11-point lead over Labour. This is significant because it's the first poll that's come out since the attacks on London Bridge on Saturday.
Very good, Francine. Thank you. Coming up, Jan Hatzius of Goldman Sachs. He is in London with an exceptionally important note on Friday and a Goldman Sachs adjustment, looking for a rate increase in December of this year. All of this off the balance sheet discussion. We'll talk to Jan Hatzius about central banks, rates, and balance sheet next.
This is Bloomberg Surveillance. I'm Taylor Riggs. Let's get the Bloomberg Business Flash. In France, Société Générale plans to raise up to $1.8 billion in an IPO of its car leasing subsidiary. That would give the business money for potential acquisitions. SocGen plans to sell 20% of the leasing unit, but it will remain the controlling shareholder. And in China, there are merger talks aimed at creating a giant power company with $267 billion in assets. According to people with knowledge of the matter, Shenhua Group has been in preliminary discussions with China Zhuodian. Shenhua is China's largest coal miner. China Zhuodian is one of the nation's largest coal-fired power generators. And that's your Bloomberg Business Flash. Francine, Tom?
Taylor Riggs, thank you so much. To win the Lawrence Klein Award is a big deal in economics. It's your calls over a 4-year span. To do it twice is flat out unprecedented. Jan Hatzius is out of Kiel, Wisconsin, Madison, and Oxford, and he joins us now. He is, of course, Goldman Sachs chief economist. Jan, it's been way too long. Wonderful to have you with us. You made a Fed adjustment on Friday, and you really linked the balance sheet debate to the interest rate debate. How do you link those two beasts together?
It's nice to be with you, Tom. So we did make a change on Friday. We basically pulled forward our expectations for when the balance sheet runoff starts. We had that in December previously. We now have it in September. But we also think that the meeting at which they announce balance sheet adjustment is probably one at which they forego a hike in the funds rate. So we pushed the hike from September to December. We do expect a hike in June, of course, as pretty much everybody, but did make a change to the second half there.
Jan,
those are
right.
The
a bit off the plot, Jan. Is President Trump dampening the economy? This was in the zeitgeist this weekend. Is the rhetoric, is the ballet of the White House, all the uproar in Washington, is it dampening the American economy?
I don't see it in the data necessarily, but I do think that the prospects for a fiscal boost in 2018 have diminished somewhat. We still expect sort of moderate tax cut because we do think that Republicans in Congress will probably want to pass something to take to the voters in the midterm election. But I do think that the various political difficulties that President Trump has had has probably made it a bit more difficult to push something through and basically corral reluctant lawmakers to pass something. It's very hard to say, I think, at this point. We certainly don't think that fiscal legislation is imminent in any case. We're probably talking early 2018, maybe very late 2017. But I think in terms of the data, I'm not really seeing that in the numbers.
Jan, thank you so much for joining us, because I know it's also the Goldman Sachs macroeconomic conference, which is why you're with us today. And I know it's a very busy day for you. Talk to me a little bit about how the Fed can actually tighten financial conditions without hiking interest rates.
Well, I think the short answer is that that's going to be difficult, and I think they will have to hike interest rates, and we think probably by more than what's currently priced in the markets. There are some other tools. Balance sheet adjustment is another tool. I don't think it's going to be as effective in tightening financial conditions. I don't think that if you very slowly let the balance sheet run off over time in a very well-signaled kind of way, that's going to have a really large effect. But there should be some impact from it. I'm just not sure that it's really going to be enough. And so, especially as you go into 2018 and beyond, I do think that the Fed's going to have to do more on the interest rate side than the very limited amount that's currently priced into the bond market.
Jan, what will happen to treasuries from here?
I mean, I think Treasury yields are likely to rise gradually over time. I have a stronger view in terms of the intermediate part of the curve, the part that's most sensitive to a sort of 2 to 3 year forward expectations for monetary policy than I do on the longer end. The longer end tends to be driven more by international factors and changes in the term premium that aren't as directly tied to the outlook for the economy and monetary policy. But my broad view is that we should get higher rates over time as interest rates normalize and the economy makes some further cyclical headway. I mean, that's also our expectation, that the unemployment rate has not yet bottomed.
Jan, you cut your teeth and made a claim under Ed McKelvey and Bill Dudley with the idea of mortgage equity withdrawal, of watching what the American consumer actually does. What is the American consumer doing in 2017?
Mortgage equity withdrawal has not been a major issue in the last decade. I do think it was very important before the crisis, basically liquefying some of the capital gains through the housing market and using some of that for consumer spending. That has not been a major issue recently. I think it's been really more of an income-driven up and down of consumer spending in the last few years. And a couple of years ago, with the big drop in energy prices, you had a very large increase in real incomes, and that gave you consumer spending growth of about 3% in real terms for a couple of years. I think we're now behind that, and the reason why 2017 consumer spending is no longer as strong as it was in the prior couple of years, I think is mainly that this big increase in real income was basically a one-off and now lies in the past. We're not pessimistic about consumer spending, but we do think that 2% or maybe a little over 2% is probably a more realistic expectation than 3%.
Jan, thank you so much for joining us. Jan Hatzius, there, Goldman Sachs chief economist. Now, coming up in the next hour, we speak with Stephen King. He's HSBC senior economic advisor. He also has a new book out called The Grave New World. That's at 6 a.m. in New York, 11 a.m. in London. This is Bloomberg.
We haven't built a major airport in 20 years. I'm told it takes 10 years to get the average permit to build one bridge. We haven't built a bridge in New York City. I mean, we're building one now at Tappan Zee. It's the first one in like 50 years. You know, I just came from Hong Kong. I mean, it's embarrassing. America, the can-do nation, should get back to building and constructing, and it's permitting, it's rules, it's requirements. We just got to get back to a can-do attitude about building infrastructure that fits our country, and we're getting behind, and we shouldn't.
That's the JP Morgan CEO, Jamie Dimon, discussing the need for an infrastructure overhaul in the U.S. It's a big week, of course, stateside, as President Trump ready to unveil details of $1 trillion infrastructure plan. Well, let's get back to David Serra, Algebris Investments CEO. David, I guess a very simple bet, is whether the Fed can raise rates, whether banks can start getting a bit of breathing room, as long as these animal spirits in the U.S. really take hold. Do you think they will?
I think in the U.S. a lot is priced in, because basically Trump has promised, the dream, tax cuts, infrastructure, animal spirits. And in reality, I think the Fed will hide because inflationary pressure are obvious. Secondly, it's easy to talk about infrastructure. It's harder to get them done. And third, on tax cuts, I think the numbers will have to add up. And so far, at least, I'm probably echoing the view of Europeans and international investors. He raises more doubts than answers.
Does that mean we're going to get a correction in equities?
Yes. I think in the US,
I
think you're more likely to get a correction in equity, also because the vast majority of investors are overweight US equity, are overweight US dollar. And it's been an easy trade over the last 7-8 years. I think with Trump there and the blue sky being priced, not clear.
Davide Serra with us, and we'll continue with algebra. And of course, we'll have a good conversation on banking as well. On Bloomberg Daybreak this Monday, a conversation with Lawrence Summers of Harvard. Professor Summers, he's looking at the global community and the Trumpian arena. He has a blistering op-ed in the FT and the Washington Post today. This is Bloomberg.
This is Bloomberg Surveillance. I'm Francine Lacqua in London. Tom Keen's in New York. Tom, let's get straight to the Bloomberg First Word News. Here's Taylor Riggs. Taylor.
Francine, Tom, in South Korea, new President Moon Jae-in is proposing a $10 billion plan to increase jobs. The finance ministry says much of the money will be used to create 86,000 jobs, 71,000 of them in the public sector. The plan may face opposition in parliament. Moon's Democratic Party holds just 40% of the seats. The U.S. military has begun a military operation to drive Islamic State from its stronghold in Syria. Turkey says the assault on the city of Raqqa began Friday night. The U.S. has been arming Syrian Kurds for the opposition. Turkey considers those Kurdish forces to be terrorists. It's worried that the weapons will eventually end up in the hands of Turkish Kurds who are fighting for autonomy. And Qatar says a decision by Saudi Arabia and 3 other Arab nations to cut diplomatic relations is baseless and without justification. The Saudis, Bahrain, the UAE, and Egypt are also suspending air and sea travel links. Saudi Arabia has accused Qatar of undermining efforts to isolate Iran. U.S. Secretary of State Rex Tillerson was asked about the split while traveling to Australia.
We certainly would encourage the parties to sit down together and address these differences. If there's any role that we can play in terms of helping them address those, we think it is important that the GCC remain unified.
The GCC is the Gulf Cooperation Council and is made up of the oil-rich monarchies of the Persian Gulf. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Tom, Francine?
Taylor, thank you so much. Now, for more on that story, let's get straight to Bloomberg Markets Middle East anchor. He's Youssef Gama Eldin. He joined us now from Dubai. Youssef, when we heard about this cutoff, right, diplomatically but also economically ties to Qatar, it's had a huge impact on Qatari stocks and also airlines.
Yeah, look, Francine, ultimately, this is something we've never seen before. The sheer ferocity of the reaction from Saudi Arabia and some of its peers to Qatar. The key line here being, well, we're not convinced about you towing the line when it comes to Iran. So this is about the relationship with Iran. Saudi Arabia wanted to continue isolating Iran. They feel Qatar has not lived up to their part of the conversation. The Qataris responding, saying they will thwart efforts to negatively impact the economy. Just to give you some context, this is like Germany blocking air, sea, and land travel on, for example, Italy. That's the kind of integration there is in this part of the world with the Gulf Cooperation Council. There's never in the history of the Gulf Cooperation Council been something like this before. This is not a diplomatic crisis. This is a diplomatic disaster because it's never happened before. And it really creates a fissure between Gulf monarchies already reeling with oil prices at, what, $50 a barrel roughly in the last few months. So that is the issue that's at stake, and it's going to be difficult to heal those wounds, which is what, of course, Rex Tillerson is pointing out.
And you said this is, I guess, the point. What does it mean for oil? Because as you say, Qatar, one of the world's richest countries, but also of strategic importance, not only because there are U.S. bases there, but it's the biggest producer of liquefied natural gas.
Yeah, ultimately, there are some serious implications on the energy front. There are questions now that are being raised, including from Mitsubishi UFG Financial, in terms of compliance. So they're saying potential risks of Qatar leaving OPEC, and that could significantly impact oil prices. Also, a full-fledged confrontation now being considered as well. In terms of the human toll, this is important to underline here, Francine. Citizens have to leave Qatar and the United Arab Emirates within the next 14 days. Also, Qatar imports a lot of food from the United Arab Emirates, let alone the air links effective tomorrow for a lot of these airlines, Etihad and Emirates. And that's a very important market for these companies and ultimately for creating and sustaining those business links, which really feeds into non-oil economic activity. So this is a serious, unprecedented setback.
Youssef, I like your idea of Germany and Italy. The difference is families are involved always within the Arab world. Tell me the distinction and the tensions between the Wahab family and all the detritus of that within Saudi Arabia, really going back to the middle of the 18th century, and the Al Thani family of Qatar. What is the animosity between these two royal families?
Well, it's been a conflict over land and over influence. That's always been the case. They have been able to patch things up a little bit over the last few decades, which is where the Gulf Cooperation Council comes in. Now Saudi Arabia felt that they needed to establish themselves as the center of power. And with the United States just coming off the back of a landmark visit with Donald Trump in Riyadh, they felt that they were emboldened and felt they could take this kind of step. And with ramifications we're now seeing across asset classes and also across businesses.
Yeah. Youssef, thank you so much. Youssef Kamal-Eldin from His Dubai this morning. With us from Algeris Investments, Davide Serra, off of our London desk this morning. Davide, you've traveled to the Persian Gulf many times. It's always fractious, and it always comes back to your London. How is Qatar perceived within the London financial community?
Qatar is perceived as a key investor in London. If you think about it, they've been one of the largest investors in the UK. They've been very supportive of the UK as a country. And I think they're seen positively. The local fight there has all to do, as you said, as you mentioned, with historical tension. Nothing to do with the UK, nothing to do with Europe. It's local fight, family fights, and we're just watching it.
Yeah, and actually, Tom, if you look at, for example, Qatar Airways, I'm going to make a distinction between Qatar Airways and the Qatar Investment Authority, but the Qatar Airways, 20% in IAG, they have 10% of LATAM Airlines, and then they do have quite big stakes. This is for the QIA in European banks. Deutsche Bank, just under 9%, Credit Suisse, and Barclays. Does this have more of an impact on the price of oil? And I don't know how you see that, on inflation expectations, or whether, because it was unpredictable anyway, it won't necessarily filter through inflation.
The reality is, I think Donald Trump's visit in Saudi Arabia and the change in tone vis-a-vis the Obama administration has been in a way destabilizing. And so I think we'll have to go through an adjustment phase. It's more has to do with local politics and what they think they can do to themselves. I have to admit that having the biggest, let's say, GCC collapse in diplomacy after a U.S. president does a visit, that's not really what we want. Ideally, you have more cooperation. You don't have this tit for tat because you never know where they lead to.
And this is the concern, right, that geopolitics has become not only vulnerable, but so unpredictable, and the market chooses to ignore it. And I'm thinking of China, but also the South, China Sea and all of that Asia area.
Well, geopolitics matters as long as it has an impact on the economy. Having said so, I think markets have been overestimating some of the geopolitical events. Remember, last year, the Anglo-Saxon community was convinced that Angela Merkel was done because she allowed 1 million immigrants and refugees in Germany. And after 12 years, she's still the strongest leader in Europe. And she's probably going to certainly be on the right side of history. As a result, what the market has learned is don't panic on the short term, understand the full picture implication. and then see what the economy does. Typically, though, every time you've seen populism rising, like we've seen in the US, we've seen in the UK, we've seen in another part, let's say, of the Anglo-Saxon world, they had to end up with more stimulus. And so markets, in a way, like the stimulus. Because basically you keep on promising stuff you can't deliver, and ultimately you got to open the checkbook.
Davide, are markets correlated right now, or equities, do they just simply have a removal and a life of their own?
I think the reason why markets have such a low volatility has to do with $14 trillion being printed by central banks. And I was an absolute in favor of quantitative easing beginning of the crisis in 07-08. The bank's recap was a must. In Europe, we were a bit too slow. I think now we're probably keeping the pedal on the accelerator for a bit too long and too hard. And as a result, I think you're seeing this lower volatility. Coupled with the rising of passive investing and algorithm investing, I think we set up ourselves eventually for a big shock. Can't tell you when. I can guarantee you it will happen.
Davide, thank you so much. Davide Serra with Algebris Investments. And we're going to come back, of course, and speak to him about banking in Europe and in the United States, as we saw James Dimon earlier. Coming up on Bloomberg Surveillance, David Gura and I will have a conversation with Richard Haas of the Council on Foreign Relations. It is a good time to catch up with Ambassador Haas. We'll do that in the 8 o'clock hour. From London, from New York, stay with us. This is Bloomberg.
Bloomberg Surveillance with Francine and Tom from London and New York. Tom, we have to talk a little bit about Italy, Italian yields, and of course the spread between Italy and Germany. Italian services PMI data missed expectations this morning despite staying in positive territory. It comes as the 10-year BTP yield has ticked higher over the past week as expectations for an autumn election grows. Well, we're back with Davide Serra. He's Algebris Investments CEO. Davide, when you look at the European economy as a whole, so it seems that growth is actually taking hold. You could argue it's even stronger than the U.S., and yet risks remain. Italy at the forefront.
I think, yes, the European economy, in my view, has been significantly stronger than people expected. If you look at PMI, we're way at all-time high the last 10 years. If you look at GDP, the same. And the unknown remains, let's say, a bit of a political risk. I think the Macron-Merkel pact to basically reignite a stronger European Union post-Brexit, I think it's key. Italy, in a way, it's the last hurdle. Having said so, market is way already positioned in it. They've already taken protection on it. So I think the vast majority of the macro community is short BTPs. And in a way, what could happen is if because of the proportional electoral law they're going to vote, they're going to end up having a grand coalition because there'll be no choice. What happens is you might see a situation like in France when then everybody is worried and they need to cover. So there could be more upside. Somehow what happened in November, remember, everybody was short Italy in October, November, referendum was lost, and then stocks and BTPs rallied.
All right, give me a sense of where this happens or where this goes from here, Davide. So this is basically the spread between Italian and German 10-year yields. This is where Mario Draghi says, I'll do whatever it takes. This is kind of the tick higher that we see. But, not levels. The spread is 1.9 because the ECB is standing firm. It's not going to go back to these levels. Is there a danger that the ECB normalizes too soon?
Well, take, first of all, that 2%, what does it mean? If you take a 7-year duration for the 10-year BTP, a 2% spread vis-a-vis Germany, that means the Italian euro in a way, it's about 14% overvalued vis-a-vis the German euro. If you consider that, an Italian exit would probably lower the lira by about 30%, that means you are giving a 50% probability of Italy leaving the EU, the euro, within the next 10 years. That to me seems way too high. As a result, I think the 2% is very, very rich. And you can see in the blips in October, November, you see the first time it went up around 180, 190. That was around the referendum. Then people covered and it went down. Then political election went back up. But again, this chart to me tells me, something like, they say, 35 to 40% probability Italy leaving the euro. To me, is wrong.
Davide, we're all familiar with the idea of the President of the United States going after Germany because of their trade surplus, et cetera, et cetera. They're being evil. They're being bad to the United States. What would the President say about Italy's trade?
I think you need to consider that Germany in particular, being in export-oriented economy, should probably further stimulate their own domestic consumption. I think Italy remains one of the top 6-7 global export nations. But we do import a lot. So net, we keep fiscal primary surplus for the last 30 years because we have a high public debt. To be honest, my view is if you make something that is good and people want to buy, that's great. I think Donald Trump rhetoric will eventually backfire. Right. And the reason is, just take the over the top. Apple, Google, Amazon, Facebook, they pay zero taxes in Europe. It's an illusion of taxes in the range of 15 billion euro plus per year. They pay 40% tax rate in the US. They pay zero here. So I think this is going to end up with us applying proper tax rule to them, and ultimately, U.S. company being hurt and paying the price, because German company do pay the fair tax share in the U.S.
What should we watch from Mr. Draghi this June? What are you going to pay attention to? We've talked a lot about the Fed, but what about the ECB?
I think if I were the ECB, I will watch carefully how Macron and Merkel reshape the European setup. Remember, we do have Brexit. It's very unfortunate that the UK decided to leave the European Union. As a result, Macron election, it's a game changer because it means France, it's back at the table for probably constitutional changes and treaty changes to further advance the European integration. We have no choice. They've already mentioned the European finance minister. They want to make the European IMF using the European Stability Mechanism with Klaus Regling. And I think as a result, the ECB is probably going to watch the structural development and start to rein in quantitative easing. But listen, we started 5 years behind the US in quantitative easing. We have some time in order to let QE back off.
Davide, thank you so much for now. Davide Serra of Algebris Investments stays with us. Now, if you're a Bloomberg customer, and we sincerely hope you are, this is what you have to do. You watch us using TV Go. There you can also look at some of the cool graphics that Tom's put together for us, our data check. And if you IB us by clicking on Ask the Guest a Question right under the video screen, you can also ask questions directly to the guest through Tom and I. This is Bloomberg.
This is Bloomberg Surveillance. I'm Taylor Riggs. Let's get the Bloomberg Business Flash. For the first time in years, Apple will use its developers conference to show off hardware as well as software. The conference begins today in San Jose, California. According to people familiar with the plans, Apple is expected to unveil iPads and Mac laptops. JP Morgan CEO Jamie Dimon wants to increase the bank's business in China. He told Bloomberg TV's Stephen Ingle in Beijing the country is on track with plans to change the financial system.
They've made huge progress in reforms, financial reforms, market reforms, but they're going to have it's going to have tough times, and we should understand that is true for every single country that's gone from an emerging market to a developing country to a developed country.
JP Morgan hopes to get a corporate bond license in China. It would also consider another joint venture there. And in Spain, Banco Popular is racing to sell assets and find a buyer. The bank's capital has shrunk because of bad real estate loans, and it's running out of time to repair its balance sheet. Last week, shares of Banco Popular fell 38%. According to people familiar with the matter, the bank will discuss options with the European Central Bank tomorrow. It may ask for more central bank loans. And that's your Bloomberg Business Flash. Francine, Tom?
Taylor, thanks so much. It is June, which means it's a good time to catch up with Davide Serra of Algebris on his world of banking. He was an acclaimed analyst on banking years ago. He's gone through 3 or 4 lives in the investment world, and he joins us now on banking. I see Popular there, Davide, and I look at the big banks, and it's the same idea. Where are the synergies in Europe? I'm just waiting to see the combination within European banking? Where is it?
Well, in the case of Popular, you have a real economy loan crisis, basically overexposure to real estate through the last decade, which hasn't been paid and accounted for. So in our calculation, you probably have a capital shortfall in the range of 3 to 4 billion euro.
Yeah.
And clearly with a market cap of 1.5 billion euro, you're not going anywhere. Now, having said so, consider the numbers. Popular has deferred tax assets, so that basically means, valuable tax shields for about 3 to 4 billion euro, has a pre-provision profit of about 1.5 billion. So European banks are worth about 4 times pre-provision profit, 6. So that franchise could be worth 10 billion to a domestic acquirer. You need only to put 3 to 4 billion in. So you basically make 2.5 times your money. So I think eventually for Popular, you're likely to find a domestic solution. That means probably shares are going to be close to zero. As a result, I think you'll be able to eventually to see consolidation, but equity shareholders get a bagel.
What's your favorite financial stock so far?
So far, for us in Europe, one of our largest holding, it's UniCredit. And the reason is because they successfully done a capital raise. Jean-Pierre Moustier has sold half of its non-performing loans, exactly what Popular hasn't done. As soon as he came, immediately raised capital up to 20 billion euro between disposal and asset raise. It still trades at significant discount to tangible. And I think UniCredit will be the first European banks over the next 2 to 3 years to be part of the pan-European consolidation. And the reason because as a core banking franchise across Eastern Europe, Germany and Italy. And so it's a very, very valuable infrastructure.
All right. What is your least favorite?
So our least favorite banks in Europe today are the overvalued regional banks, mainly in the Nordics and in the perceived safe country. And we're slowly adding protection in the UK, where with all-time high consumer debt on the credit card, on housing. I think some of the new entrants bank have been running too much risk, enjoy very high multiples, and we're taking negative bets there, thinking that Brexit will be a hard Brexit.
All right, Davide, we're just getting some breaking news from the Prime Minister, Theresa May, who I believe has done comments or made comments to reporters. I'm unclear whether it's outside Downing Street, but we'll try and get to the bottom of it. Theresa May saying that national and terror threat level remains at severe. And then you can see the podium actually outside number 10, where she will. These are not live pictures. Tom, we're trying to figure out exactly where she spoke from, but basically she has said that she will not raise the terror threat level, so it remains as severe. Remember, in the wake of the Manchester attacks, it was raised at critical and then got back down at severe.
Francine, I'm seeing over here, enough is enough. Where are we on enough is enough, or are we going to learn about that in the Prime Minister's comments here shortly?
Well, Tom, this is really the crucial question because we're 3 days away from the election. As Davide Serra was saying, the concern is that Theresa May has been saying, well, Jeremy Corbyn just doesn't have the leadership, also because of possible ties with groups such as Hezbollah.
Right.
What Labour is saying, well, Theresa May, you were in charge of Homeland Security for 6 years. What did you do about it? And why are you saying enough is enough now? So I think this will really be boiled down to the crux of the election on Thursday.
Well, we hope to see that here in a number of minutes. Ariana Edwards at Parliament as well. We hope to hear from the Prime Minister after, again, a terror attack. We'll have much more on that. In our next hour, Stephen King of HSBC out with a wonderful new book. I'm reading his book right now. It's good. This is Bloomberg. There are too many agains as terror again strikes London. In moments, the Prime Minister is scheduled to speak. The Islamic State claims responsibility, and injudicious President Trump, he criticizes the mayor of London. The judicious American ambassador commends strong UK leadership. The Gulf states, they say enough is enough. Qatar supports terrorism. The Saudis respond. And that was a lousy jobs report. Will Chair Yellen, will she adapt and adjust on to June 14th? Good morning, everyone. This is Bloomberg Surveillance. We're live from our world headquarters in New York. I'm Tom Keene. In London, Francine Lacroix. And Francine, we wait to hear from the Prime Minister of the United Kingdom.
Yeah, this is 3 days before the election, Tom. So we need to look at, of course, the terror attacks, the impact this will have on the tone of the conversation going into that election on June the 8th. We need to talk about security. What we also need to talk about, Tom, of course, is the Saudi-led alliance, which is isolating Qatar. This has implications for the U.S. military, has implication for oil, and it has an implication for Qatari stocks.
Oh, very good. Let's, on this Monday, begin with our first word news. Here's Taylor Riggs.
Tom, Francine, in the UK, Prime Minister, there's a political truce. Prime Minister Theresa May and the Labour Party leader Jeremy Corbyn ramped up the rhetoric days before Thursday's election. May argued that there's too much tolerance of extremism and called for a series of new measures. Corbyn went after May's record as Home Secretary, criticizing her for cutting police budgets. They're both due to speak shortly. Less than 24 hours after the London attack, thousands jammed a cricket ground in Manchester for a benefit concert for victims of the terrorist attack there. It was headlined by American singer Ariana Grande. 2 weeks ago, Grande just finished a concert in Manchester when a bomb exploded, killing 22 people. Saudi Arabia is leading a push to isolate Qatar over its relationship with Iran and its support for Islamist movements. The Saudis, Bahrain, the UAE, and Egypt have cut diplomatic ties with Qatar. They're also suspending air and sea travel links. Saudi Arabia has accused Qatar of trying to undermine efforts to isolate Iran. And Vladimir Putin is downplaying reports of Russian interference in U.S. politics. Putin tells NBC News he's unaware of a proposal from President Trump's son-in-law, Jared Kushner, to set up a back channel between the incoming administration and the Kremlin. Putin also said it's nonsense to say Russia has collected compromising material about Mr. Trump. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Francine, Tom?
Taylor, thanks so much. Let's do a Monday data check. And, of course, a real adjustment off that ugly jobs report on Friday. Really a bounce today, but not much. Futures were green earlier. Now they're negative. The yield, that's wrong. It's up 2 basis points. It should be green, 2.17 with a higher yield off the base of Friday. 47.82 shows weaker oil over the last 60 minutes as well. Next screen, Tania, if you would, the idea of the Dow, up we go with the VIX. That's convenient, a 10.00 VIX. And I noticed $1 churning this morning. Francine?
Tom, this is what I'm looking at. So oil jumping after the Saudi-led alliance cut diplomatic ties with Qatar. The pound slipping still. You can see 129.07. This is after the terror attack in London. It's actually reversed some of those slides after we had services PMI. So a little bit of volatility on pound overall. I'm looking at 10-year yields and a little bit left field, but actually the peso rallying on signs that the ruling PRI was ahead in the governor's election for the key state of Mexico, and then gold extending gains. Now, this morning here in the UK, the Prime Minister has been chairing an emergency COBRA meeting in London. She is due to speak shortly at the Royal United Services Institute in London. That's actually the same place where she also launched her campaign to be Conservative leader back in July of last year. Well, Bloomberg's Anna Edwards is now outside the Houses of Parliament. Anna, we had one poll out. Does the terror attack on Saturday have any influence on the election on Thursday?
Yeah, it's a good question, Francine. We're waiting for the latest polls. There's some polling, as you say, coming, but really to get a clear picture, we have to wait for a number of polls, I guess. We've seen polling that puts the Conservatives ahead between 1 and 12 points, which is quite a big margin, isn't it, over the most recent couple of weeks. The polls started to narrow after the Manchester attack, but it wasn't at all clear if that was anything to do with Manchester at all, if that was any kind of judgment on Theresa May's record at the Home Office, or if that was actually because of other policy entirely, because of a change in policy, a U-turn, some called it, on social care policy by the Conservative government in their manifesto. So we'll have to wait for the polls to get more of a clue as to whether this has changed voters' intentions. Also interesting to ask what voters are going to be voting about on Thursday. Some of the more detailed polling, away from the headline stuff around who are you going to vote for. For example, an ICM poll last month said that 44% would trust May to protect them from threats. Only 14% would say Corbyn. How has that kind of polling changed since Saturday's attack, if at all? That's going to be crucial.
Anna, what is the goal of the Prime Minister in her comments this morning?
Well, you mentioned last time we talked, Tom, that she gave this enough is enough speech yesterday, and certainly the bar's been set quite high for some sort of shift in strategy, some new initiatives, some new policy, and then she went out to set out the 4 areas that she wanted to focus on, including working with internet companies and reaching out to confront ideologies that don't sit well with British values. All of these things are things she's talked about before, so people will be wanting to look for detail. I spoke to Charles Litchfield from Eurasia, and he said we need some detail on what any of that really means.
Thank you, Anna. Greatly appreciate that this morning. We wanted to bring you someone expert on terror. It is a cottage industry with a tragedy of our many terrorist attacks. Neil Shortland is with the Center for Terrorism and Security Studies, this at the University of Massachusetts in Lowell, just north of Boston. Neil, wonderful to have you with us this morning. When we see numerous attacks, how do you change your thinking? Not one terror attack, but 1, 2, 3. What does that mean to you?
Well, if I can be perfectly honest with you, Tom, it's not entirely surprising. And the reason for that is that a little while ago, there was a very, very good bit of research done that showed that when you're looking at or predicting the likelihood of a terrorist attack, a previous terrorist attack is a very large influence. We talk about it kind of gives a psychological kick in the likelihood. And you see that so clearly in the attack we've just seen. Because one of the issues is you saw Manchester, which was very well planned, very coordinated, very complicated. And then this attack we saw in London this weekend was very crude, very thrown together, and my guess would be very much a lack of preparation. So you almost see that playing out there, that psychological kick, encouraging action from others after the successful action of one terrorist attack. So it's not too uncommon to see this clustering. What's going to be interesting is how long is the delay, how long is the gap until the next attack or the next cluster may occur.
Neil, I read John Schindler's article in The Observer carefully yesterday on the sheer scope and scale of the eligible candidates for terror within the United Kingdom. Are the public forces, MI5 and the other, are they simply overwhelmed with too many bad people?
Well, the issue here is that we don't know what threat is and what threat looks like. A few years ago, the thought was that we needed more intelligence, we needed more surveillance, we needed, more invasions of privacy. But that's not the issue, because all that does is increase that N. And the article you mentioned talks about a number of 3,000. Yeah. More surveillance is just going to increase that 3,000. What we need is to better understand what it looks like to turn to action. Now, the issue is that the move we've seen over the past 5 to 10 years is cruder, more simple. Attacks that require very little planning, very little preparation can be decided on the drop of a hat to get in the car to use a knife. And that makes predicting the high risk versus the low risk within that 3,000 phenomenally hard to do.
Neil Shortland, thank you so much for perspective this morning. He's at the University of Massachusetts at Lowell. We're waiting for the Prime Minister to speak. We saw the image there earlier of the library in central London. Right now we have the image of really an outstanding book for 2017. Grave New World is Stephen King of HSBC, and this is international relations with a huge dose of wonderful, there it is, sorry Anthony, I didn't mean to pull it away like that. I wouldn't do that. There it is, Grave New World. It's a fabulous book. Congratulations on folding history into it. Buried in your book, you talk about the Islamic State and like-minded people, where we're coalescing in our modern media into a like-mindedness. How do we adapt to that?
Well, one of the problems that I think exists within our globalized world is that the West has kind of assumed that globalization is a set of Western values that spread through to the rest of the world, and that everyone...
How colonial of us.
It is rather colonial in many ways. I mean, it comes back to the idea that American values in particular, back at the end of the 1980s, were seen to be universal values, and everyone given half a chance would accept it. When you look at the history of the world and think about the different civilizations that have been there, you've got a lot of big differences coming through.
Let's pause here. Francine?
Yeah, Tom, we're just listening to the opposition there, Mr. Jeremy Corbyn, the leader of Labour, and he's speaking in Middlesbrough. Let's have a listen.
Anybody to dictate how we live our lives or how we go about enjoying ourselves. And for those people that imagine somehow or other these kind of terrorist attacks are going to deter us from exercising our democratic right to have our election to decide who our government is going to be, wrong. We carry on. Democracy will prevail. And I made a speech about this last night and about all the issues surrounding it. And so this election is, of course, about many, many things, but it's also, I think, recognising those people that have lost loved ones and suffered as a result of it. So if you could just have a pause for a few moments' silence in memory of all those that died in Manchester and in Liverpool, and at the same time pay a huge thank you to the police, the British Transport Police, the firefighters, ambulance service, NHS crews, and so many others that did so much to try and save life. Thank you very much to all of them. They stand by us every day of the year. We must stand by them at the same time. Thank you very much. This election is now only a few hours away almost. And I tell you what, we've been travelling the whole country. And we've still...
That is Jeremy Corbyn, the leader of the opposition Labour Party. He's talking to a crowd gathered there in Middlesbrough. So, Tom, we're seeing Jeremy Corbyn continue with his campaigning. We had a brief moment of truce yesterday, and then we're also expecting the Prime Minister, Theresa May, to talk today in front of, where she actually decided to go for leadership of the Conservative Party just under 8 months ago. So let's get back to Stephen King. He's in New York. Stephen, first of all, congratulations on your book, A Grave New World. This, as Tom was saying, you also touch on, of course, extremism, terrorism. Will it shape the political parties of the UK? It's quite extraordinary that we've had 3 attacks in 3 months.
It is extraordinary, and I don't have an easy answer for you. I mean, one of the things that I think is important today and for the remainder of the election campaign is it actually does continue. Because democracy is about debate, democracy is about ending up with a general election with some kind of result that reflects the will of the people. And that's something which I think all parties have bought into over the course of the next few days. So although we had that truce yesterday, I think it's right that the debate should then continue over the next few days. What happens thereafter, of course, depends on the result of the general election. As you've already indicated, the polls have narrowed quite considerably. The Conservatives still have a lead, but that lead has narrowed over the course of the last few weeks. Not clear exactly why that's happened, but nevertheless, it has happened, and therefore it's going to be interesting to see what happens on Thursday.
Stephen, if we use a metaphor of the United States, this is a chart. Bring this chart up if you would, Jason. Here, this is real GDP back to the war, back to 1947. Here's 3.2% American GDP. Here's a boom in the 50s that you and I loved as a kid. And here's where we are now. It is extraordinary, the decade-long shortfall that we have had.
It's been remarkable, and it's not just true of the US, it's true of most of Europe as well. And what we've seen really actually before the global financial crisis is a sense that somehow Western economies are not doing as well as they had been doing from the 50s through to the end of the 20th century. And there are 2 aspects to this. The first is weak productivity growth, which has been very, very disappointing. And the other, of course, is the increase in income inequality. It's been associated with this period of weak growth. So you've got this sudden sense that the narrative of globalization, the narrative of connections across the world, has somehow soured to a degree, and as a consequence, people are beginning to say, well, let's look at an alternative kind of model.
Who has the commanding heights, taking it from Daniel Yergin's classic book, who has the commanding heights of capitalism right now?
Well, technology has played a very big role in this because, of course, technology has created a kind of winner-takes-all approach whereby if you happen to be someone who was part of WhatsApp or whatever it might be, you've become a millionaire or billionaire overnight in the most extraordinary fashion. It's also the case that when you look at the workers in the States and in Europe, many have seen very little, if any, in the way of a pay increase over the course of the last few years.
Very good. Stephen King with us, and of course, the wonderful new book, Grave New World. Right now, we're going to get a morning briefing from Kevin Cirilli as we await comments from the Prime Minister. Mr. Cirilli obviously is in Washington. Kevin, I heard a remarkable lack of information this weekend about Mr. Comey. Why was that?
Well, the administration this week, Tom, is trying to focus on infrastructure. Later today, President Trump will as these hearings loom, a series of hearings with top U.S. intelligence officials testifying in both the House and the Senate this week, starting on Wednesday. The administration trying to pivot on infrastructure.
Well, I look at infrastructure, and as Gary Cohn said somewhere out on Twitter this morning, there is no plan. Let me go to the plan, which is Lawrence Summers' morning must-read. This is in the FT and in the Washington Post. This is the former Secretary of Treasury, and he goes, Kevin, where I went a week ago and where David Frum of The Atlantic went, and then we finally saw it from someone else here the last few days. This won't go away. For all that has gone wrong in 75 years, this period has witnessed more human betterment than any time. We may have our first post-rational president. General McMaster and Mr. Cohn have advanced a theory of international relations not unlike the one that animated the British and the French at Versailles at the end of World War I. And they go on to talk about the arena. Kevin, you're the expert. Where's the arena for President Trump? Is it the Trump Hotel?
The arena this week is going to be on the U.S. Senate Intelligence Committee when now former FBI Director James Comey is set to testify on Thursday. This is a busy, busy week in terms of the administration's ability to move past the Russia probe, but it's going to be increasingly hard for them to do so simply because of the caliber of officials who are going to be testifying again beginning Wednesday. And so there are a series of questions. They haven't been able to move beyond it, but we should note that this comes at a time in which the president is consistently trying to put the focus back on his agenda. He has not been as successful as he would have liked.
All right, Kevin, thank you so much. Kevin Cirilli there now. Let's just go to central London, where the Prime Minister, Theresa May, has just started speaking. Let's have a listen.
5 years that will define the future of our country for generations to come. I called this election because as we face the start of the crucial Brexit negotiations in just a few short days, I believed it would be essential for the British government to be in the strongest possible position going into those talks. That remains the most critical issue in this campaign. But of course, when this campaign started, we could never have predicted the tragic turn that events would take. We could never have imagined the appalling depravity that led a cowardly and callous killer to target innocent men, women and children in the way that we saw in Manchester 2 weeks ago. Nor could we have envisaged the brutal attack that was carried out on the streets of London on Saturday evening. We continue to hold all those affected by both attacks in our thoughts today. And let us also continue to think of the brave men and women of the police and the emergency services who continue to deal with the aftermath, many of whom will have witnessed things that no one should ever have to see. But while it was right that we should pause to show our respects to those we have lost and to ensure all our energies were focused on responding to the immediate aftermath of those events, it is also right that our way of life and our democratic process should go on. That is why today I want to return to the choice people face in 3 days' time and to the crucial question of leadership. Because that's what this election is about. It's about which leader and which team people trust to take the big decisions that matter to Britain. About which leader and which team people trust to keep Britain safe. About which leader and which team will deliver economic security for you and your family. And about which leader and which team will travel to Brussels in 2 weeks and negotiate the right deal for Britain in Europe. Because the question of leadership has always been at the heart of this campaign, and it is absolutely crucial that we get the answer right. The ability to say the courageous thing and do the difficult thing. To face up to and address great challenges, not to pretend they don't exist or seek to wish them away. The strength to be straight with people and not just tell them what they want to hear. The ability to get the job done. That is what leadership means to me. And it is that leadership that I offer the British people at this election. Strong and stable leadership to guide Britain through the years ahead. And we need that strong leadership now more than ever. For in just 2 weeks, we embark on perhaps the most difficult set of international negotiations this country has ever known. The most difficult and the most important. Because everything we want as a country depends on getting these negotiations right. Our future prosperity, our place in the world, our standard of living, and the opportunities we want for our children and our children's children. Each and every one depends on having the strongest possible hand as we enter those negotiations in order to get the best Brexit deal for families across this country. If we fail, the consequences for Britain and for the economic security of ordinary working people will be dire. If we succeed, the opportunities ahead of us are great. I have negotiated for Britain in Europe, and I know that the best place to start is to be clear about where you stand and what you want. That's why I've been clear that we do not seek to fudge this issue, to be half in and half out of the EU. The British people made their choice, and it would be a scandal to do anything other than respect their decision. And it is right to respect the view of other European leaders, also when they say we can't be half in, half out of the European Union either. So we will leave the European Union and take control of our money, take control of our borders, and take control of our laws. Our money, so we no longer pay huge sums to the European Union every year, but spend that money on our priorities here at home. Things like the new Shared Prosperity Fund we will put in place to reduce the inequalities that exist within and between the 4 nations of our United Kingdom. Our borders. So while we continue to attract the brightest and the best to work or study...
That is Theresa May, the UK Prime Minister, of course, speaking from central London. If you are a Bloomberg customer, you can follow both the Prime Minister's speech, but also Jeremy Corbyn, who's speaking in Middlesbrough, going on to Live Go. Now, we're back with Stephen King of HSBC. Stephen, if you look at your London, what are people going to vote for on Thursday? Is it security? Is it the economy? Is it Brexit?
Well, it's interesting listening to what Theresa May just said, because there's clearly an attempt to suggest that strong and stable is back. That phrase had been sort of disappearing over the last few days, but it's now back as a phrase that clearly is a response to the terrorism attack to a certain degree. It's also worth noting she's saying that she is the only person who can offer the kind of credible leadership. She's basically having a little dig at Jeremy Corbyn and saying, can he really offer the same kind of leadership, particularly within Brussels? But I think for British voters, she's trying to push the idea that she's a more competent leader than Jeremy Corbyn is. And in one sense, that's his weakness. He's never served in cabinet. He's never run a committee in Parliament. He's got a series of inexperiences relative to Theresa May, and that's exactly what she's going to try to focus upon.
If we do see a hung parliament on Thursday, Stephen, can the Tories find some kind of coalition with anyone, or does it automatically mean that we have the SNP and Labour Party in power?
Well, it all depends on the numbers themselves. At the moment, it's just too difficult to work out precisely what might eventually happen. We know, of course, that in the last hung parliament back in 2010, the Lib Dems held the balance of power. And under those circumstances, they were eventually able to form a formal coalition with the Tories, which perhaps people hadn't expected before the election itself. So after the vote, it's anybody's guess as to what will actually happen.
Lawrence Summers talks about 75 years. You address it in Chapter 2 of Grave New World, the new imperium. What is the new imperium for 2017?
Well, the new imperium for the last 70 years is basically the US, which set the rules of the international game, that sponsors all the institutions that we know and not so much love, but we know about in terms of the rules of the game international, the IMF, the World Bank, through the Marshall Plan, eventually the European Union. Going forward, I think it's worth stressing that there are new actors in this game who are pushing their own institutions, most obviously China. China is creating institutions which are, in one sense, like a 21st century version of the Bretton Woods institutions. You think about the Regional Comprehensive Economic Partnership, which is a sort of trade deal for Asia. You think about the Asian Infrastructure Investment Bank, which is an infrastructure bank to sponsor the kind of Belt and Road initiatives that the Chinese have. So China, in one sense, is trying to pick up the reins of globalization, even as the US appears to be less less enthusiastic about sponsoring it, as was the case previously.
Help us with that dreaded 30s word bloc, spelled B-L-O-C. I mean, that's sort of the affectation of the moment. Are we in danger of a 30s bloc? Mr. Summers goes back to Versailles. Can you go back to the 30s?
Well, I don't think the 30s are quite the right comparison to make. But I think you could go back to, well, the most obvious one that people talk about is pre-First World War, when you have the combination of a successful existing power. Back then it was the UK, today it's the US, and a rising power. Back then it was Germany, today it's China. And the question is, how do you make room for the rising power to succeed and have space to expand, while at the same time keeping the existing power comfortable? And that's something which throughout history has been very, very difficult to achieve. So that relationship between China and the US could be a difficult one in the years ahead. Yeah, and you wonder about moments before World War I as well. I can't say enough about Grave New World. We'll come back with Dr. King here in a moment. There are your two candidates in England. Again, the election on Thursday, June 8th. We'll have full coverage of that across all of our platforms. On Bloomberg Daybreak today, it was my morning must-read. It was brilliant on the global community and Mr. Trump's arena. A conversation with Lawrence Summers, a beautiful essay. Whether you agree with him or disagree, you got to read Larry Summers this morning. Stay with us from London, from New York, with Stephen King of HSBC. This is Bloomberg.
Francine and Tom from London and New York. This is Bloomberg Surveillance. Tom, we've been talking about oil quite a lot. It was gaining quite significantly earlier this morning. Now it's given up a lot of the gains. You can see at 47.64. Now it had gained on the Saudi-led alliance that cut diplomatic ties with Qatar. What this means is that it's closing off access to the Gulf country. It's also raising tensions in the world's biggest oil-producing region. Well, we're back with HSBC's Stephen King. Stephen, I don't know how much focus we should put on this. This is significant, and we thought that it was going to play out on the markets through oil. But what do you make of the fact that it's actually giving up a lot of the gains today?
Well, it's so difficult to tell what's happening in this particular story. The fact that Saudi and the Gulf states appear to have fallen out with Qatar is interesting in itself, partly perhaps because Saudi is trying to reposition itself as a country that can be trusted by the West. Of course, there have been some big questions about its own sponsorship of various illicit activities around the world over the years. The other issue, I guess, is that if you've got a break in the relationship between different countries within the Middle East with regard to oil, if OPEC or something somehow is undermined by this, then you might expect oil prices to be lower rather than higher over the medium term. But I think we're still very, very early days to make any predictions of that kind.
Does it feed, if it goes a little bit higher, does it feed through inflation, or does inflation actually stay pretty much immune to a spike in oil prices?
One of the striking things over the course of the last few decades, I guess now, is that the kind of oil shocks we had back in 73 and 79 just don't have the inflationary consequences that we had back then. I think part of that is because central banks these days have a lot more credibility with regard to inflation targeting. It's partly because aging populations hate inflation. It's partly because unions are a lot less powerful. It's partly because technology makes sure that wages can't rise as quick as they have done in the past. So the kind of wage price spiral we might have seen with oil shocks in the past is one that I think is very unlikely to materialize this time around.
I mean, you look at oil and you'll see how it ties in here. And as we were talking earlier, it just comes back to global GDP. You know, there's a supply dynamic and there's a demand dynamic.
Absolutely.
Not only where is the demand, I'll get it out. It's Monday, folks. Help me here. The demand dynamic on oil, but is there a demand dynamic for the greater global economy?
Well, there's a big difficulty currently, which is that we've got tremendously supportive fiscal and monetary policies, but they're not really delivering quite the outcome that people had hoped. I come back to this idea that it's productivity which has been so remarkably weak, particularly in the States and also to a degree in Europe. I look at the payrolls report last Friday. What's striking is that the unemployment rate is very, very low. You'd normally think of that as being a sign of economic strength. But the absence of productivity growth means that you're not getting the wage increases coming through in the usual way.
All right, Stephen, thank you so much. We'll be back, of course, with Stephen King of HSBC. Now let's get straight to the Bloomberg First Word News. Here's Taylor Riggs. Taylor.
Francine, Tom, starting in London, British Prime Minister Theresa May is signaling that she'll seek new powers to root out terrorism. May took a tough line a day after attacks in London killed 7 people. The attacks took place as the UK prepares for Thursday's election. May says stamping out terror will require some difficult and often embarrassing conversations. She is speaking right now. Labour Party leader Jeremy Corbyn attacked May's record as Home Secretary. He pointed to her cuts in police budgets and warned you cannot protect the public on the cheap. In Russia, Vladimir Putin is downplaying reports of Russian interference in U.S. politics. Putin tells NBC News he's unaware of a proposal from President Trump's son-in-law, Jared Kushner, to set up a back channel between the incoming administration and the Kremlin. Putin also says it's nonsense to say Russia has collected compromising material about President Trump. And President Trump is kicking off a week-long campaign for his infrastructure plan. He's sending Congress a proposal to hand over control of the air traffic control system to a nonprofit corporation. Later in the week, the president will go to Ohio seeking support for a plan to put $1 trillion into roads, bridges, and other public facilities. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Francine, Tom?
Taylor, thanks so much. Where in the world is Waldo? We all know it. We all know the cliche. Well, how about this? Where in the world is a plan? Where in the world is staff? It would be good to talk to somebody who's politically attached and actually knows how to build, manage, and do a staff. Terry Haynes works with Ed Hyman and the team at ISI Evercore. He's their senior political analyst and has way too much experience in Washington going, I need a general counsel right now. Mr. Haynes joins us here on the going-ons of the Beltway. Terry, long ago and far away, you helped write Sarbanes-Oxley. Long ago and far away, you helped create staffs. Where are the staffs in 2017 Washington to create policy and law?
Well, good morning, Tom. Good morning, Francine, and thank you for that generous introduction, Tom. The staffs basically are in waiting, and the staffs are caught in what appears to be some internecine warfare within the White House, and the president has been, bottom line, has been very slow to nominate those who can be confirmed by the Senate, and very slow to, with some exceptions, like at the National Economic Council, but generally very slow to fill out the appointed staff that doesn't need Senate confirmation, and and that's a looming problem that's I think getting larger by the day.
Okay, well, there's light at the end of the tunnel. Where's the light at the end of we got to build a staff, Mr. President tunnel? How is this going to get fixed?
My guess is that it gets fixed because the cabinet secretaries, particularly those in the most important posts, no disrespect to the Secretary of Agriculture, but people like Secretary Mnuchin at Treasury, Secretary Tillerson at State, others say, look, we are engaged. You'll remember this, Tom. We are engaged in a process to try to slim down and streamline the government departments, and that's perfectly fine. But at the same time, we're going to need some political appointees in the sort of Senate confirmed below levels, and we need to get on that right away. It needs to become a major priority. And my guess is that the non-Senate confirmed lower levels kind of go first, almost by default, because just confirming a Senate nominee, any Senate nominee, takes a fair amount of time, and this administration and the Congress have now worked themselves into a position where they can still accomplish a great deal on the agenda, but time is very tight. The congressional schedule is very tight, so they're going to need to do both of those things.
Terry, talk to me about the Saudi-led alliance cutting Qatar ties over Iran. Does it make it difficult for the Trump administration, first of all, because it's just 10 days after the president showed up in Saudi? And two, does it make it difficult for American presence in the Middle East militarily?
Well, I think bottom line is they are proceeding very carefully on the Iran sanctions issue and getting a lot of counsel, both inside the Congress and outside, and proceeding on. It's common to call these things a reset, as you both know, but proceeding fairly carefully on their reset. So I don't look for precipitous actions to happen here very quickly. And what I see right now is a collaborative process between the administration and Congress on this, and I think that's generally good news.
Terry Haynes, thank you so much. With ISI, their senior political strategist. We continue with Mr. King of HSBC, of course, with a wonderful new book, Grave New World. Full disclosure, I'm actually reading it. How scary is that? I read this, folks. I read a chapter every day up in the acclaimed food court with my Cheez-Its. So there's Cheez-Its all over my copy.
Must be a collector's item then.
Larry Summers talked this morning. Larry Summers is going to be on Daybreak, and he talks about a post-rational president. Terry Haynes was just talking about the irrationality of no staff. How do we get to a post-rational presidency, or maybe even a post-rational United Kingdom?
Well, one of the things that's happened is that in both the US and the UK, there's a sense that the narrative has completely changed.
Yeah.
Being engaged with the rest of the world to increasingly becoming disengaged with the rest of the world. A desire almost to blame others for the difficulties that exist at home. So the Brexit vote, in one sense, was a desire to say, well, we can do better in the UK on our own, almost like a nostalgia trip back to the 1950s or 1960s, than we can being engaged with the EU. In the case of the US, there's a sense that perhaps with the rise of China and the rise of other superpowers in the world, the US no longer can afford to play the role of the kind of the big dominant power globally, has to sort of cut its cloth in a different way, and that has led to a much greater focus on what's going on domestically. And of course, the other big issue here is that Trump talked in his presidential election campaign about the forgotten men and women of America. And in one sense, he's got a point in the sense that a lot of people have not seen income gains over the course of the last 20 or 30 years. Whether he can fix it is another matter altogether. But nevertheless, the narrative that came through was one that said globalization isn't working for everyone. It's something which has created winners and losers.
All right, Stephen, thank you so much. Stephen King, of course, stays with us. He's the author of his new book, Grave New World. In the meantime, talking about Grave New World, there are elections here in the UK on Thursday. We're hearing from Prime Minister Theresa May talking in central London, saying we cannot deny the threat of Islamist extremists is at the gravest. Now, Mrs. May also accusing her main opposition party, Jeremy Corbyn, of hiding and denying views on the IRA. Mr. Corbyn at the same time talking in Middlesbrough, saying, well, she's been a Home Secretary. She should be held accountable for her 6 years in office. We'll have plenty more on this contest. Of course, we're 3 days away from the election. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua in London. Tom King's in New York. Now, Tom, coming up shortly, it's Bloomberg Daybreak Americas with David West and Jonathan Farrow and Alex Steele. Good morning to you, David. What do you have coming up on the show for us?
Good morning, Francine. Well, two things. First of all, just as Tom was talking about before the break, we have Larry Summers, who has written in the Financial Times today about that post-rational presidency. And particularly, he's concerned about what it'll mean if the U.S. really abandons that international coalition, the community of nations that we've had since World War II. And then leading out of that, we're going to be talking with Arne Sorensen, the CEO of Marriott, to ask him really, as a global CEO of an entertainment company, how does he address all of the things that are happening, whether it's London or whether it's Qatar, all these things that come across his desk. We're going to be addressing that. But Tom, as I understand it, we're going to be leading into another global CEO that you have on.
Well, we do right now, David Weston. Thank you so much. Stephen King with us with HSBC, with his wonderful new book. And joining us right now, Richard Solomon. He's with IHG, their CEO, exiting CEO. Help me with this.
Yeah, I'm moving on in August.
You're moving on in August. Yeah. So you're getting. You have a hotel, the Park Lane.
Yeah, we do.
Intercontinental Park Lane.
Yep.
Fabulous hotel. There it's on that gorgeous hotel strip. Hot and cold running Bentleys anywhere you look. How do you adapt to the horror of what's been going on in London? I want to know, at a granular basis, you've got to go into a meeting with your head of security and they go, we need to do this. What is it?
Yeah, well, it's an unfortunate fact of life today, isn't it, that we do have these terrible events going on around the world, most recently in London. And it's something we have to deal with, and we've always had to deal with. It's not actually new. It's been something around for a long time, dealing with terrorism, dealing with things. So we have, you talk about head of security, absolutely. We have a very experienced security and risk team in all markets around the world, and we have very clear procedures up front in terms of how we operate in different risk environments. And that goes down to hotel level. So the hotels will know and they'll practice what you have to do. Is it a lockdown? Is it security? So that's sort of part of our life today as a global hotel operator.
On the business side, and this goes for Brian Kelly, the points guy, and everybody that watches the show and all the different audiences we have, hotels like IHG are trying to get the booking process back from the internet people. How are you going to do that? How are you going to take the world back from the booking.coms?
Well, for Intercontinental Hotels Group, we've got 5,200 hotels. We're in 100 countries. We've got a lot of brands, Holiday Inn, the biggest, Intercontinental you mentioned. The vast majority of our booking is actually direct already. For us, the OTAs, the online travel agents, is a small piece of our business. And it's a perfectly acceptable piece for customers who are price-sensitive leisure travellers. For loyal travellers, people who want to be loyal to a brand, who want to be a member of a loyalty scheme, IHG Rewards Club, we've got nearly 100 million enrolled members, they want to book direct. We can give them a better experience, better pricing, and create a much richer experience overall. So I think it's about channel management. And when you've got strong brands, strong loyalty program, it puts you in a very good position to do that.
Richard, give me a little bit of sense of actually if you believe terror attacks will impact tourism in London like they did in the wake of the Paris attacks. Will people stay away from the city?
Well, we haven't seen it, Francine. I mean, I think clearly there's a risk of that. What we've actually seen, though, and I think you've seen it in a lot of the news reporting, is people are very resilient. They're almost sanguine about it. They want to carry on their lives. And so I think if they believe the security forces are on top of things, and there's obviously been a lot spoken about that, then we've found that people will carry on travelling. You get a short-term blip, but it tends to come back very, very quickly.
All right, Richard, also give me a sense of, so we're seeing pound maybe getting a little bit of technical support. I mean, this is all, technical stuff for investors, but have you seen an increase in demand for your hotel rooms since Brexit happened because pound was weaker?
Yeah, I think we have. I mean, the UK has been pretty strong, particularly in London, and I think that's been helped. Now, the fact that it's actually a strong economy and a lot going on is one of the key drivers anyway of hotel business. But probably at the margin, the strong pound has helped us in the UK.
All right, around the world, so you're a huge hotel company. I mean, you have many, many brands at kind of all level of very expensive, beautiful hotels and more moderate for the average consumer. What's doing especially well at the moment, Richard, and in what geography?
Actually, we're doing well across the piece. I mean, our two biggest markets are the US and Greater China. Both are growing fast, and we're seeing, as I said, pockets of growth like in the UK. But you say, I think it's important for us as a global company being in many markets, being with Intercontinental at the top, Holiday Inn Express. We're actually shortly going to be announcing a fresh new mainstream brand, so adding another brand to our portfolio.
Okay, I want you to bring cigars back at the Willard Hotel. You own the iconic of iconic hotels in Washington. I believe an upstart down the street opened another hotel in the old post office. How do you tackle the bar of the Trump Hotel? Kevin Cirilli called me up on Saturday, folks, our chief Washington correspondent. He said, you got to ask Richard about what he's going to do to compete with the Trump Hotel. Kevin's there 5 nights a week. How do you get him back in the octagonal bar?
Well, the Willard Hotel, which we run, we don't own, actually, but has been a...
You run it. Come on, it's you guys.
Yeah, it's been an iconic institution in D.C. It's doing extremely well. I think you'd be surprised if I knew the individual strategy we're putting on the ground. But it does come back to what you were talking about. And I was talking about strong brands, strong loyalty program, brand portfolio. Because actually, many, many customers, when they're different needs and different occasions, when they're not in D.C., they may be taking their family away to a resort. Could be a Holiday Inn resort, could be an Intercontinental resort. So the power of the big brand companies actually comes from having a really good portfolio of brands, loyalty program that actually adds a lot of value.
Right.
And that's really how we drive our hotels around the world, including that one.
You got to get the president to bring back Cuban cigars and make the Willard Hotel what it used to be. This is where lobbyists came from, Stephen. They got this big, long, gorgeous lobby where the lobbyists lobbied, spitting and missing the spittoons, and Solomon would go nuts.
It's still a bit like that, Tom.
Yeah, a little bit like that. Thank you so much. Richard Solomon, he's with IHG. Of course, we're going to come back with Steve King. How about TV Go? You can look at our guests. There it is, TV Go. Not me. No, orange bow tie. Who picked that out? You can come over here, right here, click on this, and seriously, you can go to a great chart in a discussion with Stephen King about our grave new world. Off your trading desk, must watch, TV Go. Try it. Just try it. That's all I'm asking. Try it.
This is Bloomberg Surveillance. I'm Taylor Riggs. Let's get the Bloomberg Business Flash. In China today, JP Morgan CEO Jamie Dimon sounded off on a wide range of topics from infrastructure to climate change. He spoke to Bloomberg TV's Stephen Ingle in Beijing.
It's embarrassing. America, the can-do nation, should get back to building and constructing, and it's permitting, it's rules, it's requirements. We just got to get back to a can-do attitude about building infrastructure that fits our country. This economy has been chugging along at just under 2% growth for 8 years. It's a very long recovery. It's a weak recovery. It's about half of the average recovery. We're in favor of trying to control carbon, and I wish they had stayed in, but I think another reporter made an argument, the reason it's staying in is just to show you're collaborating. The collaboration is a good thing between nations. It's not a bad thing. And, obviously the Trump administration felt differently about that, but we wish they'd stayed in.
Dimon also said that China has made huge progress on market reforms. And that's your Bloomberg Business Flash. Francine, Tom?
Taylor, thanks so much. We're going to make an exception here, folks. We're going to do that because of his wonderful new book. Our single best chart today is a chart I showed you at the beginning of the hour. Let's go back to it. This is the U.S. real GDP over 60 years, and it shows where we are right now. And it is extraordinary, 3.2, 3.2, 3.2 across these decades, the boom out of World War II. And Stephen King, this is extraordinary. You've twice gone back to productivity. Yes. Is it about the dynamics of capital? Is it about the dynamics of labor? Or is it something we don't know? Robert Kaplan said, we don't know technology.
Well, technology, I think, has created winners and losers. It hasn't quite created the sort of trickle-down effect that people might have expected over the course of the last few years. But also, I think that productivity has not been helped, perhaps, by the persistence of very low interest rates and QE. It's tended to reward listed companies that are often large and inefficient, make it more difficult for new startup companies to come into particular industries. The consequence has been that you've ended up with less in the way of the kind of creative destruction, which is at the engine of capitalism.
Interesting.
So all these things have been, I think, a problem.
Right. Is there a concern that actually if we start normalizing, so you either think that we need to normalize, central bank monetary policy ASAP because we're behind the curve, or you say, well, as soon as they do get normalized, it could create shocks, and that would be even more of an excuse to be anti-globalization?
Well, the difficulty, I think, is that raising interest rates when growth itself is already so low is itself quite risky. And the last thing that central banks want to have at this stage is the possibility of raising interest rates and discovering there's a recession just around the corner, which they're then blamed for themselves. That would raise some big questions about their own independence. So that's, I think, a tricky issue.
Stephen King, thank you so much. Greatly appreciate it. With Grave New World, the end of globalization, the return of history, all sorts of dynamics off the jobs report, and one of them we saw was weak dollar. But there's some real nuances within the Bloomberg surveillance foreign exchange report this morning. Bring it up, if you would. Dollar yen was a 109. We're now, we took dollar yen away. It was a 110. Sterling back up above 129, and the dollar index churning. Up top is peso really down to the basic idea of support. Stronger Mexican peso today, moving on. Right now, Prime Minister May still speaking in the United Kingdom. It has been a lengthy set of comments as she moves to the Thursday election. We will continue. Of course, don't forget Lawrence Summers with Daybreak. Look for that coming up on television. David Gura and myself will be out on Bloomberg Radio with Bloomberg Surveillance. That is not pollution. That is the fog of New York.